Hello everyone, welcome back to my channel. Today we will be taking up questions from Unit 2, Reconstruction of Partnership. I hope you have watched the lecture number 1, which was on Unit number 2. Okay, and in this lecture we'll be taking up questions on Unit number 3, Reconstruction of Partnership. Okay, this will be again based on, it will be an exam oriented MCQ. So we will solve the questions. Okay, so let's start without wasting further time. Now let's start with question number 1. Question number 1, the formula of sacrificing ratio is old ratio minus new ratio. Simple. Question number 34, the formula of gaining ratio is new ratio minus old ratio. Simple. Okay, in exams you will get options on A, B, C, D. You will have to select the right option. Okay, now question number 35. ABC are partners sharing profits in the ratio of 5:4. ABC are partners sharing profits in the ratio of 5:4. C is admitted as a partner and he acquires 25% of his share from A. B surrenders 1/4 share from C, 1/4 share from his share in favor of C. Calculate C's share in profit. Okay, so what is happening? C is a new partner. Wait, let me just open a new tab. Okay, for this it was, I guess, this, right? No, this is the same. It was this, yes. Okay. So now ABC are partners sharing profits in the ratio of 5:4. Okay, so we are doing question number 35. Okay, question number 35. A and B are partners sharing profits and losses in the ratio of 5:4. 5:4. Okay, C is admitted for how much share? For 1/4 share. You can say 1/4 share. Okay, 1/4 share. Now he acquires 25% of his share from A. Okay, so what is A's sacrifice? A's sacrifice is 25% of his share. Okay, so how will we find out? 25% into what is A's share? 5/9, right? 5/9. So let's solve this. 25 by 100 into 5 by 9. This will be 125 by 900. So if you less this by 25, you will get 5 by 36. Okay, I hope this is clear. 5 by 36. So A sacrifice in favor of C is 5 by 36. B surrenders 1/4. B surrenders 1/4 from his share in favor of C. Okay, so he is surrendering 1/4 from his share. Okay, from his share. So what will be the answer? B sacrifice is equal to 1/4 from his share. What is his share? What is B's share? 4/9. Okay, so from 4/9 he is sacrificing 1/4. Okay, so 36, 16 minus 9. If you will find the answer is 36. 7 by 36. Okay, 7 by 36. Now what is the requirement of the question? Calculate C's share in profit. Okay, so we'll have to calculate C's share. So what is C's new share? C's new share will be A sacrifice plus B sacrifice. Okay, so 36, 5 plus 7 will be 12 by 36. It will be 1 by 3. Okay, so this will be the answer for question number 35. Okay, so what is the answer? 1 by 3. Okay, I hope this is clear to you. So now let's move to question number 36. What is question number 36 saying? Let's read. A and B were partners sharing profits and losses in the ratio of 3:1. With effects from 1st Jan 2022, they agreed to share profits in the ratio of 2:1. Okay, due to change in ratio, B's gain or sacrifice will be we have to calculate B's gain or sacrifice. Okay, we'll have to calculate B's gain or sacrifice. So simple question. Okay, so let's solve here only. Okay, so what is old ratio? Old ratio between A and B is 3:1. What is new ratio? New ratio is between A and B is 2:1. Now we'll have to calculate B's sacrifice or gain. Okay, so you can calculate anything, it will be maybe sacrifice or gain. So let's calculate B's sacrifice. Okay, what is the formula of sacrifice? Old minus new. So B's old ratio is 1/3, sorry 1/4, 1/4. New ratio is 1/3. Okay, so 12, 4, 3 minus 4 will be 1/12. So it is minus. So basically B is gaining. Okay, so B is gaining 1/12. Okay, so this is our answer, gain 1/12. Okay, I hope this is clear. 36 is done. Now if you want, you can note this down. Okay, wait, I did not give you time to note this, right? If you want, you can note this down. Take the screenshot and note it. Question number 35. Okay, and this is for question number 36. Okay, so now we will move with calculation of goodwill. Okay, so I hope your concepts are clear on what is goodwill. Okay, so I will not discuss it in a very deep. Okay, I will just give you an overview of goodwill. Okay, so what is goodwill? We all know that we have been learning that goodwill is reputation of the firm. Okay, reputation of the firm, reputation of the firm. But no one, teachers don't explain in detail what is goodwill, right? So there is a lot of confusion between students on this concept goodwill. Okay, students used to simply by heart the treatment. If there is existing goodwill, you write off. Okay, so this way. So we will not do that way. We'll just give a proper clarity. Okay, we'll have a proper clarity. It will take some extra time, but it's always good to have conceptual clarity and solve questions. Okay, so your exam will basically be based on your concepts. Okay, the exam will check your concepts. You will not have to solve any questions on prepare revaluation account, partners capital account. Your question will be solely based on the concepts. Okay, so we all know what is goodwill, right? Reputation of the firm. Now let's try to crack this. Okay, what is goodwill? So basically there are two types of goodwill. There are two types of goodwill. One is purchased goodwill, okay, and the other one is self-generated goodwill. Okay, self-generated goodwill. Okay, there are two types of goodwill. First one is purchased goodwill, second one is self-generated goodwill. Okay, now let's see what is purchased goodwill. Purchased goodwill. Okay, now let's take an example to understand this. Okay, let's take an example. There was one person called as Mr. X. Okay, Mr. X. Mr. X, he is a accountancy teacher. Okay, running his coaching institute, coaching or tuition institute. Okay, now Mr. X is running his institute in the name of Accountancy with Mr. X. Okay, in the name of Accountancy with Mr. X. Okay, so this is the name of the coaching class. Okay, now third point, let's see. He is accountancy teacher running running accountancy institute. Okay, running tuition or coaching institute in the name of Accountancy with Mr. X. Okay, now Mr. X has been teaching from 12 years. He has been teaching, he has, say, let's take 20 years. Okay, he has been teaching since 20 years. Okay, 20 years since, take any year, let's say 2002. Okay, let's say 2002 or 2003. Okay, so he has been, it's been 20 years since he's teaching this subject. Okay, so now don't you think almost all the accountancy teacher, almost all the accountancy students, so all the commerce students will know Mr. X? Okay, if he's teaching in one area, okay, if he's teaching, say for example in a capital city, let's take an example of Aizawl. Okay, if he's teaching in Aizawl city, don't you think all the commerce students will know him very well? Okay, because he's been teaching for 20 years and he'll be obviously having a good base of students. Okay, and he'll be a very good teacher, let's assume. Okay, now Mr. X, what has he decided? He has decided to retire. Okay, Mr. X has decided to retire. Okay, he wants to retire. Okay, he wants to retire. He don't want to continue with teaching. Okay, he wants to stay at his place. He has earned a good amount of money. He wants to stay at his home now. Okay, he don't want to teach anymore. Now there is another person called as Mr. Rahul. Okay, there is a person named Mr. Rahul. Okay, Mr. Rahul is a young boy, just starting. Okay, he is planning to start his accountancy coaching classes. Okay, planning to start accountancy coaching class. He is planning to start accountancy coaching class. Accountancy coaching class. Okay, you just have patience. Okay, you just have patience. You just listen to this example. All your doubts will be cleared. All your doubts will be cleared. Okay, so I'll repeat it again. Questions will be based on concepts. Okay, questions will be based on concepts, and I'm here to help you with that. Okay, I'm here to solve your concepts. Okay, to make your concepts more clear. Now let's come back to the example. Mr. Rahul, he is planning to start accountancy coaching class. Okay, he is a fresher. Okay, now Mr. Rahul, what has happened now? See, okay, Mr. Rahul, he came to know that there is a person called Mr. X. He has been teaching since, it has been 20 years since he is teaching accountancy. Okay, and he has decided to retire. Now just think. Okay, just think. Mr. X has a coaching institute. He has a coaching institute. Okay, so he will have all the assets. He will have tables. Okay, he will have chairs. He will have whiteboard. Okay, and other assets. He will have other assets. Okay, he will have all the assets which are required to run a coaching business, to run a coaching class. Okay, he'll have all the assets. Okay, now Rahul is a fresher. Okay, he will not have any assets as of now. Okay, he'll have to purchase everything. Okay, so now what has happened? Rahul, he went to Mr. X. Okay, Okay, he said to Mr. X that, see Mr. X, I have heard that you are retiring. Okay, now what will you do with your assets? Okay, so Mr. X said, I will obviously sell this off. Okay, it is of no use for me now. Okay, now without students, what is the value of these assets, right? If he's not going to teach anymore, so he will not have he will not be using this asset, so he has decided to sell it off. Okay, so Rahul went to Mr. X and said that I want to buy all your assets. Okay, so Mr. X said, okay, the value of this assets is rupees 1 lakh rupees. Okay, so Rahul gave Mr. X 1 lakh rupees. Okay, and Mr. X gave Rahul all the assets. Okay, all the assets. He gave Rahul all the assets. Okay, now what will be the journal entry in this case? If you have to now forget about journal entry. Okay, now let's just talk about the concepts only. Now Rahul has purchased assets worth rupees 1 lakh. Okay, now Rahul, he was very smart. Okay, he is very smart. He said to Mr. X that, Mr. X, you will not be running your business anymore, your coaching class anymore, so as I'm purchasing all your assets, okay, can I continue this coaching with, can I start my coaching with your name, Accountancy with Mr. X? Okay, can I start my coaching with the name Accountancy with Mr. X? Okay, Accountancy with Mr. X. So what has Mr. X said? Okay, you can do that, it's fine, but you will have to pay me rupees 1,20,000 now. You will have to pay me 1,20,000. Earlier you were paying 1 lakh rupees, okay, for all the assets. Now you will have to pay me 1,20,000. Okay, now Mr. X was more smarter. Okay, after all, he was an accountancy teacher. Okay, so Rahul said, why extra 20,000? Okay, so he said that, see, logic is simple. You will start your coaching class in my name. Okay, Accountancy with Mr. X. So obviously the past students which knows me, okay, the students who know me, okay, they will obviously give their juniors reference that you go and study from Mr. X. Okay, now when they come to coaching class, Mr. X will not be there, you will be teaching. So because of my name, you will get readily available market. Okay, because of my name, all the students, okay, who knows me will come to your coaching class just because of the name Accountancy with Mr. X. Okay, so this 20,000 is for the goodwill, for the name which I have generated over the years. Okay, so this amount of 20,000 which you are paying me is not for the assets, it's for the goodwill. Okay, so this kind of payment which we make, see, for the assets you have paid how much? 1 lakh rupees. Now the total you have paid is 1,20,000. So this 20,000 will be for goodwill. This will be for goodwill. Okay, so the total amount now which you will pay to Mr. X is 1,20,000. 1,20,000. Okay, so now in your balance sheet, how will you recognize this? Assets will be 1 lakh rupees, and goodwill will be 20,000. Okay, so this kind of goodwill is called as purchased goodwill. This kind of goodwill is called as purchased goodwill. I hope this is clear. Okay, so write one note. Okay, write one note. As per accounting standard 26, only purchased goodwill will be recorded in the books of accounts. Okay, so what does this accounting standard say? Accounting standard 26. Okay, you will learn this when you join CA. Okay, accounting standard 26, only purchased goodwill will be recorded. Okay, will be recorded in the books of accounts. Okay, so this kind of transaction wherein you pay some extra money, okay, in this example, so this 20,000 extra will be called as purchase goodwill. I hope this is clear with this example, right? So whenever you are in doubt, you remember this example. Okay, Mr. X and Mr. Rahul. Okay, so I hope this is clear. So now I will move to self-generated goodwill. Okay, self-generated goodwill. Self-generated goodwill. Okay, now what is self-generated goodwill? The word itself tells us that we are the one who is generating our own goodwill. Okay, we are the one who is generating our own goodwill. Okay, basically we are calculating our goodwill. So this kind of goodwill will not be allowed to be recognized in the books of accounts. Okay, only purchase goodwill will be allowed to be recognized. If you get a question on MCQ, which type of goodwill can be recognized in the books of account? Option A, purchase goodwill. Option B, self-generated goodwill. Option C, both. Option D, none. Okay, so the right answer will be option A, purchase goodwill. Okay, so now let's talk about self-generated goodwill and why we calculate goodwill. Okay, now let's take a hypothetical example. Okay, there are two partners, Mr. M and N. Okay, M is for Mukesh Ambani. You all know who Mukesh Ambani is. He is the chairman of Reliance Industries. And N for Nita Ambani. Okay, let's assume that they are in a partnership business. Okay, let's assume that they are in a partnership business. The name of the firm is M&N and Company. Okay, this is the name of their business. Okay, this is the name of their business. Okay, this is the name of their business. Now they are in a business of, say for example, they are in a business of what example shall we take? They are in business of selling. Sorry, let's take an example. Okay, they are in a business of telecom. Okay, they are in business of telecommunication. Okay, they are in business of telecom. Now, just a hypothetical example. Okay, they are in a partnership firm. They are running a partnership firm. There are two partners, Mukesh Ambani and Nita Ambani, M&N. Okay, now Mr. Mukesh Ambani and Nita Ambani, okay, they are running this business from 10 years, past 10 years. Okay, they are running this business. Now there is a person called as Mr. R. There is another person called Mr. R. Okay, Mr. R has decided to join them in their partnership firm. Mr. R has decided to join their partnership firm, and Mr. M and Miss N, they don't have any problem. Okay, Mukesh Ambani and Nita Ambani, they don't have any problem joining with Rahul, Mr. R joining their business. Okay, they are joining their partnership firm. Now see what will happen. Say for example, their profit sharing ratio was 3:2. Okay, the old sharing ratio of Mukesh Ambani, Nita Ambani is 3:2. Now Rahul has joined Mr. R has joined the partnership firm. Okay, now we all know that when a new partner is admitted, the new partner will bring his share of capital and goodwill. Okay, he will bring his share of capital and goodwill. Now this capital will be transferred to the capital account of partner, to R's capital account. This capital will be transferred, say in our example. Okay, this capital will be transferred to R's capital account. Okay, and this goodwill will be transferred to sacrificing partners capital account. Okay, in their sacrificing ratio, right? This is the case. Now what is this goodwill amount? We are talking about this goodwill. So this goodwill will be a self-generated goodwill. Okay, why is it necessary to calculate self-generated goodwill. Why will a new partner bring in his share of capital? Capital, so it's clear, right? You are entering a partnership firm, you will obviously have to bring capital. This part is clear, this part is clear, capital part is clear. But what about this goodwill? Why a new partner has to bring his share of goodwill? Okay, we'll understand that with an example. Okay, now see, Mr. R has decided to join M&N company. Okay, now Mr. R will obviously bring his capital and goodwill. Okay, now see, Mr. Mukesh Ambani and Nita Ambani, they are in telecom business for how many years? For 10 years. Okay, for 10 years. Now, from 10 years, they have been carrying on their business. Okay, they have reached certain heights. Okay, they have reached certain height. Now, Mr. R, he is a fresher. Okay, he has just entered into a business. Okay, he has just entered into a business. He is at this level, zero level. Okay, and they are at much higher level. Say for example, they are at much higher level. Okay, these two, Mukesh Ambani and Nita Ambani. Now, say for example, they are earning sales of yearly. They have sales of rupees 100 crores, and they are earning profits of rupees, let's say 40 crores every year. Now, Mr. R is a fresher. Okay, he is just entering the partnership firm. Okay, now once he joined the partnership firm, once he becomes partner of Mukesh Ambani, Nita Ambani, Mr. R will be able to enjoy these profits. He'll be enjoying these profits. Okay, he'll be enjoying these profits. He will be enjoying the readily available market. Okay, he will not have to do all the struggles which Mr. Mukesh Ambani and Nita Ambani had done for these 10 years. Okay, so don't you think this is unfair for Mukesh and Nita Ambani? This is unfair for M&N, because if they are earning profit of 100 and if the ratio is 3:2, M will get how much? M will get 3/5 and N will get 2/5. Okay, M will get 60, he will get 40. Okay, now when Mr. R joins them, this amount which they are getting will be much lesser. Okay, once Mr. R joins them, what will happen? Their profit sharing ratio will be lesser. Okay, they will get less profits. Okay, now see from the point of view of Mr. R. Mr. R will be very happy, na? Mr. R will be very happy because he is enjoying the readily available market. Okay, now say for example, if he had to start from the scratch, okay, he had to start from zero level. Okay, do you think he'll be able to reach this point? No, he will need some time. Okay, Mukesh and Nita Ambani had taken 10 years, so he might also need 10 years to reach this level. Okay, sales of 100 crore, profit of 40 crore. Okay, so what will happen now? Since Mr. R had joined them, okay, okay, he will, once he had joined them, okay, he will enjoy these profits. This is the reason why, okay, a new partner has to bring in his share of goodwill. Okay, why will he bring his share of goodwill? The new partner will have to bring in his share of goodwill, okay, to compensate the sacrificing partners. Okay, this is the point. So now let's understand with an example. 3:2, the profit sharing ratio was 3:2. Okay, so old ratio between M and N was 3:2. Okay, 3:2. Now R is admitted, R joined them, R is admitted. The new ratio is what? Between M, N and R is, let's say 3:2, let's say 2:2:1, 2:2:1. Okay, let's say this is the sacrificing ratio. Now see, you can see here M, the profit which M was getting was 3/5, right? Now because of R's admission, he will be getting 2/5. Okay, now let's take an example. If the profit is 100 rupees, what will be M and N share? 100 into 3/5, 60 rupees. 100 into 2/5, 40 rupees. Okay, now when R joins them, what will be the profit distribution? M, N and R. Okay, So 100 into the new ratio is 2 by 5, 100 into 2 by 5, 100 into 1 by 5. Okay, so what is the ratio? 40, 40 and 20. You see, 40, 40 and 20. Earlier M was getting how much? M was getting 60, N was getting 40. Now in 100 profit, M is getting 40, right? See, there is a reduction of 20 rupees. There is a reduction of 20. Okay, so M is sacrificing rupees 20 in favor of whom? In favor of R. Okay, N is same, N is enjoying same profits. Okay, there is no change in N. So who is the sacrificing partner in this case? M is the sacrificing partner. Okay, M is the sacrificing partner. He is sacrificing in favor of R. Okay, now don't you think a sacrificing partner should get something in return of his sacrifice? Yes, right, because he is the one who has worked so hard for 10 years to reach this level. Now certainly a person comes in and joins them and enjoys this profit. Is that fair? No, it's not fair, right? That's not fair. So this is the concept of self-generated goodwill. Okay, who will calculate the self-generated goodwill? Existing partners. As this existing partners will calculate self-generated goodwill. Okay, and who will get the share of goodwill? The sacrificing partner. Sacrificing partners. The sacrificing partner or partners will get the share of goodwill in their sacrificing ratio. Okay, I hope this is clear. I hope this is absolutely clear. In our example, only M was sacrificing. Okay, but there may be cases where both the partners may sacrifice. Okay, that can be also the case. So I hope the concept of purchase goodwill and self-generated goodwill is clear. Why is it important to calculate self-generated goodwill? Okay, now in your question, when you solve goodwill, you will see, if you solve goodwill according to average method, you will see goodwill is equal to 2 into 2-year purchase. You will see goodwill is calculated at, let's say, 3 years purchase. Goodwill is calculated at 3 years purchase. Okay, 3 years purchase of average profits of 5 years. Okay, you will see this kind of question now. So what is this 3 years purchase? This 3 years is simply the time which Mr. R will take to reach this level. In our example, it was 10 years. Okay, so this is how it is calculated. So average profit 3 years, R will take 3 years to reach the level M and N are there presently. Okay, and average profit means we have to take the profits of average profits of 5 years. Okay, so this is the concept of self-generated goodwill. I hope you are absolutely clear. Okay, so now let's move with the question. Okay, let's move forward with the question. Now let's take an example. Okay, question number, let's take up the question. Okay, question number 37. A Limited purchased a building worth rupees. A Limited purchased a building worth rupees 1,40,000. Machinery worth rupees 1,50,000 and furniture worth rupees 10,000. Okay, from B Limited. A Limited is the buyer, B Limited is the seller. Okay, and took over its liabilities of rupees 20,000 for a purchase consideration of 3,15,000. Okay, see, now we'll have, what is the requirement of the question? Calculate goodwill or capital reserve. Okay, so we'll have to calculate goodwill or capital reserve. Now see, let's see how we will solve this type of questions. Okay, so now in the example of Rahul and Mr. X, see, in the example of Rahul and Mr. X, where is that? Yeah, in the example of Mr. Rahul and Mr. X, what was the amount of goodwill? 20,000, right? 10,000 was the amount of assets which he purchased, and he paid 1,20,000. So the extra which he paid was how much? 20,000, right? So now can I say that, if you pay more than the value of assets purchased, it will be the extra amount will be called as the excess amount. The excess amount paid will be called as goodwill. Okay, the extra amount which you have paid is for the goodwill. Okay, similarly, if you pay less than the value of assets, okay, value of assets purchased, okay, the amount, the deficient amount will be called as capital reserve. Okay, so this is two important point which you can note if you want. Okay, so now let me make one change in this. Okay, this assets will be net assets, we will call net assets. Now what is net assets? This will be called as net assets. Okay, net assets. So now when will we call net assets? Let's see. Okay, net assets is equal to total assets minus total liabilities. Okay, so this net assets will be compared with the amount paid. In our example, in our question, it is written as purchase consideration. Okay, so let's solve this question. Question number 37. Here purchase building worth 1,40,000. Okay, here purchase building worth rupees 1 lakh. Question number 37. Here purchased building worth rupees how much? 1,40,000. And machinery worth rupees 1,50,000. Machinery worth rupees 1,50,000. Furniture worth rupees, what was the amount of furniture? 10,000, and liability 20,000. Okay, furniture is for 10,000. So what is the value of assets? Total assets purchased. Here's purchased how much? 3 lakhs. 3 lakhs. Okay, now he has taken up liability. Okay, liability, he has taken the liability. See, he has taken liability of 20,000. Okay, this liability, it was of whom? It was of B Limited. Now if A has taken the liability, so he'll have to pay this liability, obviously, right? So we will less the liability. Okay, less liabilities. What is the amount? 20,000. Okay, so what is the amount of net assets? Net assets is 2,80,000. Okay, this is 2,80,000. See, building, machinery and furniture, these are all your assets. Okay, now what will happen? With this? You will pay for this, right? You will pay for this, you will pay the amount for this. Okay, but you are also taking the liability. Now you are also taking the liability which you will have to pay. Okay, this is liability of B Limited, but now you have purchased, so you will have to pay this liability. Your cash will be reduced. Okay, obviously if you pay 20,000, your cash will be reduced by 20,000, right? So what is the net asset? 2,80,000. Now this net asset will be compared with the amount we have paid, purchase consideration. Okay, this was 280 was to be actually paid. Okay, but how much we have paid? See, we have paid 3,15,000. We have paid 3,15,000. Okay, so we should pay 2,80,000. We have paid 3,15,000. So what will be this be? The difference amount will be our goodwill. Okay, so the difference amount of 35,000 will be our goodwill. Simple and logical. Okay, so what will be the answer for this? 35,000. I hope this is clear to you. Okay, I hope this is clear to you. Okay, so now let's move with question number 38. What is question number 38 saying? If X share of profit was to be calculated, on the basis of average profit, of the last 3 years. Okay, if X profit was to be calculated on the basis of average profit of last 3 years. Now it is clear that we'll have to find the average profit. Okay, which were, now profits of the last 3 years were 1,36,000 for 2018, 1,54,000 for 2019, and 1 lakh for 2020. Okay, so we can calculate average profit with this. Now X share of profit for the period from 1st April 2020 to 30th June 2020 shall be calculated on the basis of average profit. Okay, shall be calculated on the basis of average profit. So now we have to calculate the profit of X for the period April to June. Okay, how much months? April, May, June, 3 months. Okay, for 3 months we'll have to calculate the profit of X, okay, on the basis of average profit. simple, and the profit sharing ratio is 4:5:1. Okay, his share of profit will be, so let's calculate this. Okay, question number 38, very easy question number 38. Okay, so X, what are partners? X, Y and Z are partners sharing profits and losses in the ratio of 4:5:1. Okay, X, Y, Z ratio is 4:5:1. 4:5:1. Okay, now whose profit we have to calculate? We have to calculate X share. Okay, so what is X share? X's share is equal to 4:10. Simple. Now what is the question saying? We'll have to calculate X share on the basis of average profit. See, on the basis of average profit. So I know that I have to calculate average profit. Okay, so let's first calculate average profits. Okay, average profits of 3 years. So what is the profits of first year? 1,36,000. Okay, 1,36,000. This working will be basically done on rough. Okay, you don't have to properly write anything. 1,54,000. 1,54,000 plus 1 lakh. Okay, plus 1 lakh. Now to find the average, I will have to divide it by 3. Okay, so what will be the average profit? So the average profit is 1,30,000. Okay, so what's the question saying? We'll have to calculate C share of profit for average based on average profit. Okay, now one mistake which student will do is at this point. Okay, at this point, see, we have to calculate profit for this period only, for 3 months only. Okay, for 3 months only. So now let's calculate X share is equal to, this is for 1 year, 1,30,000. What is X share? 4/10. 4/10. This is for all the partners now. So we'll have to find out X share. Okay, into, we have to calculate for 3 months, 3/12. Okay, so what will be the share of profit? It will be 13,000. Okay, so the right answer is 13,000. Simple. Okay, you can copy now. Okay, so this, the answer will be 13,000. Okay, I hope this is clear. Okay, so now let's move to question number 39. Question number 39. Okay, now what is the question saying? Valuation of goodwill. Okay, valuation of goodwill takes place on which of the following occasions? Okay, valuation of goodwill takes place on which occasion? Okay, on which of the following occasion? Incorporation of new business. Incorporation of new business. Okay, when we start a new business, a fresh business, okay, will we calculate goodwill? No, we cannot calculate the goodwill. Now, what is goodwill? Goodwill is reputation of the firm. Will you generate goodwill? Will you generate reputation on the very first day of business? No. Okay, goodwill, for goodwill to generate, it will take time. Okay, we'll have to take time to calculate goodwill. So this option is definitely not the right answer. Second option, change in profit. Sorry. Next option is change in partnership firm. Okay, change in partnership firm. Yes, when there is change in partnership firm. Okay, when there is change in partnership firm, when there is admission of a partner, when there is any changes in the partnership firm. Okay, will we calculate goodwill? Yes, we will calculate goodwill. Okay, so this answer, I hope this option is correct. Okay, now let's see C, amalgamation of partnership firm. Okay, amalgamation of partnership firm. What do you mean by amalgamation of partnership firm? Amalgamation means two firms, okay, two firms will join and become one firm. Okay, two firm will join and they will become one firm. Okay, basically this will take over or this will take over, maybe this may take over or this may take over, or they may mutually come together, okay, and form one company. Okay, so will goodwill, calculation of goodwill takes place? Yes, because both the firms will have partners here, another firm also will have partner, right? So this, both the firms, they will be merged into one firm. Okay, they will amalgamate into one firm. Okay, so partners will be here also, partners will be here also. So we all know the total share of the firm is 1, right? So out of this 1, let's say there are 3 partners here, there are 2 partners here, so there will be changes in profit sharing ratio. Okay, so in case of profit sharing, when there is changes in profit sharing ratio, what will we do? We will calculate who is sacrificing. Okay, so yes, this option is also correct. Okay, now point number D, admission of a partner. Oh, I have flipped it. Admission of a partner. Admission of a partner. This is clear. Okay, when there is admission of partner, we will calculate goodwill. Okay, I have discussed this in detail. Dissolution of firm, when we dissolve, when the business comes to an end, will we calculate goodwill? No, right? We will not calculate goodwill. So what is the correct answer? The correct answer will be B, C and D. Okay, so the correct answer will be B, C and D. You will get options A, B, C, D. Okay, B, C, D, C, D, A. Okay, so you have to choose the correct one. Okay, so I hope this is clear to you. Okay, this is absolutely clear to you. So now let's move to question number 40. Okay, question number 40. What is the question saying? Let's read. Goodwill at 2 years purchase. Goodwill at 2 years purchase. For Rahul to reach Mr. Mukesh Ambani and Nita Ambani will be how much? He will take 2 years. Okay, of 3 years average profit. Okay, of 3 years. Students used to be usually confused. Okay, will we calculate? Will we say goodwill is equal to 2 into average profit or 3 into average profit? No, it will be 2 into average profit. Okay, so 3 is basically the years of profit which we will take to calculate average profit. Okay, 3 years average profit is 144. Now what is this 144? This is the average profit of 3 years. Okay, if the firm earned a profit of 33,000 in the previous year, if the firm earned a profit of 33,000 in the previous year and 46,000 in the year before that, okay, in the year before that, the third year's profit would be, what would be the third year's profit? So basically we'll have to calculate the third year's profit. Okay, simple. We'll have to simply apply the concept of average profit. We'll have to simply apply the concept of average profit. Okay, see, I have told you now, this exam, the pattern will be based on your concepts. Okay, it will be based on the formulas. Okay, so let's see how will we solve this question. Okay, what is this? Question number 40. Question number 40. Question number 40. Okay, we'll have to calculate profit of third year. Okay, calculation of profits for third year. In your exam, you will not write this whole thing. Okay, you will simply start calculating. You will say average profit. Okay, what is the average profit? The average profit is given in the question. See, average profit is 1,44,000. Okay, 1,44,000. Average profit is how much? 1,44,000. Okay, wait, let's do it this way. Okay, so goodwill is equal to, question is given as goodwill is equal to 2 into average profit of 3 years. Okay, now what is the value of goodwill? The value of, see, goodwill at 2 years purchase, goodwill at 2 years purchase of 3 years average profit is 1,44,000. So the value of goodwill is 1,44,000. Okay, so goodwill is 1,44,000. Okay, 2 into average profit, that they have given us data for the average profit, profit of first year, profit of second year. We have to calculate the third year's profit. So 33 plus 46. So average profit, how will we find? 33 plus 46. Okay, so we'll have to find the profit of third year, so we will say X. Okay, let X be the profit of third year. Okay, so now to find the average profit, I'll have to divide by 3. Okay, now what will happen? This 2, you will, 144 will be multiplied by 3. Okay, and this and this will be multiplied by 2. Okay, so what is 33 plus 46? It is 79. 2 into 79,000 plus X. Okay, so if you multiply 144,000 into 3, we get 4,32,000, and if you multiply 79 into 2, we get 1,58,000, plus if you multiply this 2, we get 2x. Simple. Now minus this will go to the left hand side, this will go here, and this will be 2x. Okay, so now can I find out the value of X? Yes, I can do that. It's very simple now. Okay, minus 1,58,000 divided by 2, 137,000. So the value of X, wait, let me do it this way. So what is 432 minus 158? This is 274,000. Okay, so what will be the value of X? 274,000 divided by 2, it will be 1,37,000. thousand. Okay, so this is the answer. See, you can solve this type of questions in less than a minute. Okay, less than a minute. You will get 40. How much questions you will get? You will get 50 questions. Out of 50 questions, 40 questions will have to be solved. Okay, and I think the time given will be 40 minutes. Okay, so which means one question is equal to 1 minute. Okay, so you'll have to be fast. Okay, you'll have to be fast. Now though we are explaining now, that's why it's taking time. Otherwise it's very easy to solve. Okay, you just have to apply the formula. So now note this down if you want to. Okay, this is the answer of question number 40. I hope this is clear. Now let's move to question number 41. Okay, so the answer of this is, what was the answer? 1,37,000. 1,37,000. Okay, so now let's move to question number 41. Pick the correct one. We have to pick the correct option. Okay, we have to pick the correct option. Goodwill is a real asset. Is goodwill a real asset? No. Is goodwill a wasting asset? No. Is goodwill an intangible asset? Yes, goodwill is an intangible asset, because we cannot see, we cannot touch the goodwill, intangible assets, right? I've told you goodwill. What is goodwill? The extra money which we have paid, right? You have paid money for goodwill, you have purchased goodwill, but can you see? Can you touch? No. Okay, so is goodwill a current asset? No. So the right answer is C. Okay, a simple one. You'll get simple questions, you'll get tough questions, you'll get tricky questions. Okay, be ready for all type of questions. So now we are done with question number 41. Let's move to question number 42. We have to calculate the profit of, we have to calculate adjusted profit. Now this is very important question. Okay, mark this as very important. Mark this as very important. So now let's see what's the question saying. Calculate the amount of adjusted profit. Calculate the amount of adjusted profit. So what we have to calculate? Adjusted profit. So this is the requirement of the question. Okay, we have to calculate adjusted profit. The first thing you have to do is you have to read the question properly, and you have to see what is the requirement of the question. What is question asking? Okay, what is the main requirement of the question? So the main requirement of the question is to calculate adjusted profit. Okay, we have to calculate adjusted profit for the year ended 31st March 2021 for the purpose of valuation of goodwill from the following information. Okay, so what we'll have to calculate? We'll have to calculate average profit. Okay, for the purpose of, we have to calculate adjusted profit for the purpose of goodwill valuation. Okay, now information is given. Profit for the year ended 31st March 2021 was 80,000. Now we'll have to calculate adjusted profit for 31st March 2021. Now the actual profit, this is actual profit. Okay, the actual profit is how much? 80,000. But we have to calculate what? Adjusted profit. Okay, now on 1st July 2020, on 1st July 2020, okay, on 1st July 2020, a major plant repair was undertaken. A major plant repair was undertaken for rupees 10,000. Okay, we had done some repair work in our plant and machinery, so we had paid 10,000 for that. Okay, which was charged to revenue. Which was charged to revenue. What do you mean by charged to revenue? It simply means this expenses was debited to P&L account. Okay, now I will discuss difference between revenue and capital expenditure. Okay, now what's the question saying? The seed sum means this 10,000. This 10,000 is to be capitalized. What do you mean by capitalized? Okay, let's see now. We'll discuss. For goodwill valuation, subject to adjustment of depreciation at the rate 10% per annum on reducing balance method. Okay, so this is very important question. Okay, I will mark this as very, very important. Okay, so please read this question once again. Okay, and take your time, pause the video and read this question once again. Okay, before we solve. Okay, pause this and read this question once. I hope you have read. Okay, now let's move with the concepts. Okay, let's try to first understand, before solving, let's try to understand difference between revenue expenses and capital expenses. Okay, I hope you know what is difference between revenue and capital expense. If you don't know, we will discuss it here. Okay, now we are doing question number 42. Question number 42. Okay, so now see what is the difference between revenue nature and capital nature. Okay, we'll have to understand this capital nature. Okay, now for this let's take an example. Okay, let's take an example. Let's take an example. We have purchased a machinery for rupees 10,000. Okay, we have purchased a machinery for rupees 10,000 and we have paid installation expenses of rupees 100, say for example. Now when we purchase the machine, okay, it was not possible for me, say for example, I'm running a business, okay, I'm running a business, or you are running a business, understood this way, okay. You have purchased a machinery from the market, okay, you have purchased machinery from the market. Now this machinery, okay, this is purchased in what it was like, you know, it was not a one piece machine, okay, it came in pieces, okay, it came in pieces. So what you have to do, you have to assemble this machinery before it can be used, okay, and you have to install it at some place, okay. Now you cannot do that work, okay, you employ some expert, the engineer or the mechanic, you can say, okay, he came to your premise, okay, and he helped you install this machine, okay, he helped you to bring the machine to the position where it can be actually used, okay. So this type of expenses which you incurred will be called as installation expenses, okay. So this type of expenses will fall under capital nature, okay, this type of expenses will fall under capital nature, okay. So now what will happen if it is a capital nature expense, okay, I have purchased the machinery for 10,000 rupees and the installation amount which I have paid is 100 rupees. So now what will be the total value of the assets purchase? Total cost will be 10,100. Okay, I will take this installation expenses also as my cost of my machine, okay, cost of my machine, because this expense has been incurred to make the machine work, okay, simple as that. So this kind of expenses will be called as capital nature, okay, capital nature. Basically, if a machine, if you have incurred some expenses and if it will give you additional profits, okay, that will be called as capital expense, okay, it will be called as capital nature. But for you as of now, you try to understand with this example, okay. So this type of expense will be called as capital nature, okay, capital nature expenses. Now what is revenue expenses? Now you have done a repair work, okay, this is a machine, it can be bad, right, it can stop working. So you call a mechanic again and you had some repair work on this, okay, you changed some parts and you did some, you know, cleaning and all the repair work was done, okay. So you have paid 10,000 for this repair work, Now this kind of expenses will be taken to your P&L account, okay, because this is of revenue nature, Other example of revenue expenses is salary. You pay salary to your employees, right, you pay rent, okay, you pay office expenses. So this kind of expenses will be called as revenue nature, okay, and this type of installation expenses and all like will be called as capital nature expenses, okay. I hope this is clear to you, okay. So I hope this is clear to you, okay. So where will expenses of revenue nature go? Where will we transfer? We will transfer it to P&L account, okay. And then where will expenses of capital nature go? It will go to the assets account, okay. Basically what will happen when you prepare your assets account, you have purchased machinery, So what will be the, let's talk about journal entry, okay. First, what will be the journal entry? If you have to do it separately, okay. Now first you have purchased machinery, okay. So machinery is coming in, machinery account debit, cash is going out to bank, say for example, okay, 10,000 rupees being machinery purchased, okay. And second entry will be installation expense. You have paid installation. So in this case also the value of the machine will be increased by 100 rupees to bank, 100 rupees. So now when you make a machinery account, what will happen? This will go to the debit side to bank, okay, 10,100, okay. So machinery value will be 10,000. Now at this value depreciation will be calculated, okay. I hope this is clear, simple as that. Now if you have done some repair work, in this case what will be the journal entry for this? Repair is an expense, so repair expense account debit to bank or cash, or bank, 10,000 rupees, okay. Now this is a nominal nature, so at the year end it will be closed by transferring to profit and loss account, okay. I have discussed this clearly, okay, golden rules of accounting in my previous video. I have in the basic lecture video, okay, I have discussed this in like in a clearest form. Okay, I cannot explain it more clearer than that, so you can go and watch that video. Okay, so this will go to the P&L account. Okay, so it will be closed by transferring it to P&L account. Okay, now this is called as revenue expenses, and this is called as capital expense. Okay, I hope this is clear to you, crystal clear to you. Now let's come back to our question. Okay, so what is the question saying? I will read it again. Okay, this is a very important question. You will get this kind of question. Okay, and it will be a tricky one. Calculate the amount of adjusted profit. I have to calculate the adjusted profit. Okay, I have to calculate the adjusted profit. The profit which the question has given me, this is the actual profit, this is correct profit, but I have to calculate adjusted profit for valuation. Okay, for goodwill valuation. Now a major planned repair was undertaken for 10,000, which was charged to revenue. Okay, we had debited this amount to P&L. Now what the question wants us? The question wants us to charge this as, to take this 10,000 as our capital expenditure. Okay, so what will happen if we incur capital expense? If there is a capital expense, this 10,000 will go to the machinery account. Simple. It will not go to the P&L account. Okay, but subject to depreciation of 10%. Now let's solve this. Okay, let's solve this. What will happen? Let's see. Question number 42. Question number 42. Okay, so what will happen? So actual profit. What is the actual profit? Actual profit of 31st/3/21 is 80,000. Actual profit is given 80,000. Okay, actual profit given is 80,000. Now repair work done on 1/07/2020. Okay, 1/07. Where is this written? Okay, yeah, 1 July 2020. Okay, how much amount? 10,000. See, from this we can say that it is they are following financial year. Okay, now I'll have to calculate adjusted profit subject to depreciation. Okay, we have to provide depreciation on the adjusted profit. Now I will say calculation of adjusted profit before depreciation and repair expenses. Okay, what will be the amount? I'll explain this in detail. Okay, for those who don't understand. 80,000 is the actual profit. Now if I add back this, what will happen? It will be 10,000. Okay, 90,000. Now before moving forward, let's understand what I have done. Okay, here now see, when you prepare a P&L account, in the question you have repair expenses. Okay, to repair, these expenses has been transferred to P&L account debit side. Okay, and the actual profit, net profit, is how much? 80,000. Okay, now this treatment is absolutely fine. This treatment is absolutely fine. There is no problem with this entry. Okay, the company has done very correct entry, but for the purpose of goodwill valuation, the question wants us to take these expenses. Okay, take this repair expenses to plant account, to machinery account. Okay, so these expenses will either come to P&L account or it will go to machinery account. Okay, but the question wants us to take it to the machinery account. Simple. Now if I take this repair, if I capitalize this repair expenses, okay, if I take this repair expenses to P&L account, what will happen? There will be changes in my profit, right? This net profit 80,000, I have found out it has come after 10,000 has been debited. Okay, now the gross profit might have been 90,000, and if I debit repair account, see, GP will be 90,000. If I less 10,000, okay, to expenses, repair expenses, my net profit will be 80,000. Simple. Now if I remove this 10,000, if I take this to machinery account, I will have to add this 10,000 back. What will I have to do? I'll have to add this 10,000 back. Now I will add this, the profit is 80,000. I will add this repair amount 10,000 back, and I will get my adjusted profit. Okay, adjusted profit of 90,000. Simple. Okay, simple. So let's see what is the amount adjusted, calculation of adjusted profit before depreciation and repair expenses. We have found this out. Okay, now the question has said clearly that these expenses will be capitalized subject to depreciation of 10%. Okay, now let's understand this point. What has happened? Okay, see, let's do a timeline. Okay, 31st/3 year is ending here, and repair work has been done on 1st July 2020, I guess. Yeah, 2020 of 10,000 rupees. Okay, now if I charge this to my P&L account. Okay, I will not calculate depreciation on this because this is not going to the machinery account, right? The moment I take this amount to the machinery account, depreciation will be calculated on this, right? Simple. See, in our example I have told you here. Okay, this installation expenses is of capital nature, 100 rupees. So what has happened? So now depreciation will be calculated on the actual price of the machinery, on the actual price of the machinery, on the actual price of the machinery and the installation expenses. Okay, so in our example, in our question, I'll have to calculate depreciation on this 10,000 rupees, right? I'll have to calculate depreciation on 10,000 rupees simply because I am capitalizing these expenses. Okay, so repair work was done on 1st July. Now for your understanding, you can assume that I have purchased, what if I had purchased machinery worth rupees 10,000 rupees? Okay, what if I had purchased machinery worth rupees 10,000? I would have obviously charged depreciation for this period. Okay, so I am doing that. Okay, I am doing the same. Okay, in this case, now let's see depreciation. We'll calculate depreciation on this 10,000. Okay, so 10,000, because the question has said we have to charge depreciation of 10%, subject to depreciation of 10%. Okay, so we'll have to calculate depreciation at the rate. What was the rate? 10%. Okay, so depreciation into 10% into, for how many months? For how many months? See, the repair work was done on 1st July. Okay, year is ending on 31st March. So we'll have to calculate depreciation for 9 months. Okay, so 9 by 12. Why 9 months? See, 1st of July, August, September, October, November, December, Jan, Feb, March. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, so what will be the amount of depreciation? This will be 750. Okay, so I'll have to calculate adjusted profit after depreciation. Okay, so calculation of adjusted profit after depreciation. This, see, if I have capitalized, this depreciation will obviously go to P&L account now. So I'll have to calculate the adjusted profit. So the right answer will be 90,000. This is profit, calculation of adjusted profit before depreciation and repair expenses. Okay, so now here I'll have to reduce, I'll have to minus depreciation amount of 750. Okay, so what would be my right adjustment adjusted profit? It will be 89,250. So this is the right answer. Okay, so I hope you have understood this with proper clarity. Okay, so you just watch. If you have problem, you watch it 2 times, 3 times, you will eventually understand it. Okay, so students used to be confused with this capitalization and revenue nature, capital nature. Okay, it's simple. If the question has simply said us, see, let me repeat, the question has simply said that this expenses has been, this expenses is of revenue nature. Okay, it is of revenue nature. It has to be taken to the P&L account, but for the purpose of goodwill, okay, for the purpose of goodwill calculation, the question wants to capitalize, the question wants us to capitalize this expense. So what do we mean by capitalization of expenses? This 10,000 will be treated as increase, will be treated as increase in the value of assets. Okay, the value of the assets will be increased. We have incurred money for this, no? We have paid money for repair, 10,000. So what will happen? We will take this 10,000 to our machinery account. So the value of the machinery will increase obviously by 10,000, right, on 1st July. So if the value of machinery is increased, so obviously we'll have to calculate depreciation for this period, 1st July to 31st March. We have not provided the depreciation in the P&L account. Okay, because actual profit is 80,000 and this has been treated as repair. Now if we have to calculate adjusted profit, we have to provide depreciation because the question has said subject to adjustment of depreciation at 10%. Okay, I hope this is absolutely clear to you. Okay, see, if you have any problem, okay, if you have any doubt, you write it in the comment section. Okay, you comment it and I will try to solve the problem. Okay, if you don't understand a particular thing, so now you please pause the video and you note this down. Okay, 89250. So the right answer is 89250. I hope this is clear to you. Okay, so now let's move forward with question number 43. What is the question saying? Let's read. X and Y are partners in a firm. X and Y are partners in a firm, sharing profits in the ratio of 3:2. Okay, Z admits in the firm for 1/5 share in profit. Okay, Z is admitted in the firm for 1/5 share in profit. 1/5 share in profit. Z brings in rupees 40,000 capital and required amount of goodwill. We know that when new partner is admitted, he will bring in his share of capital and goodwill. The capital amount is given, but goodwill amount is not given. Okay, now the goodwill of the firm was valued at 60,000. The goodwill of the firm was valued at 60,000. The amount of premium bought by Z would be simple. What is the answer? What is the value of goodwill of the firm? Goodwill of the firm value is 60,000. See, 60,000. So what will be Z's share? 60,000, 6 lakhs into what is the share? 1/5. Simply divide by 1/5. You will get the answer is 1,20,000. Okay, this is simple. So you write down the answer. You note the answer. Okay. Now let's come to question number 44. Question number 44. What is the question saying? This part now, unit number 3 is basically the you'll have a good number of questions from this part. Okay, because this unit number 3 covers your admission, retirement, death. Okay, so 3 chapters in 1 unit. Okay, so it will take time, so the video may even be longer. Okay, so please have patience, watch it. I am all this hard work, I'm doing it for you only. Okay, for you students only. I'm not getting any benefit from this, because you may say you are uploading it on YouTube. Nothing, I'm not getting any benefit. Okay, retention ratio of students is very less. Moreover, my target students is class 11 and 12, class 12 students whom I'll be giving tuitions, right? You have already cleared class, you will be obviously clearing class 12, you will go to college, but I have nothing to gain, I have nothing to lose. I'm revising, right? I'm going good with my basic concepts. You are also, you don't have anything to lose. Okay, so please be patient. It's just a matter of 7 to 8 lectures. You watch it properly, you will pass with flying colors. Okay, so now let's come back to our question number 44. Okay, so let's read this question. At the time of admission of a new partner, okay, at the time of admission of a new partner, general reserve appearing in the old balance sheet is transferred to. Okay, what is general reserve? This is the accumulated profit. Okay, the profits which we have earned in the previous years. So what will happen? The firm will, for those students who don't know, okay, see, the firm, say for example, in the year 2022, the firm had earned a profit of 10 lakhs. Do you think this 10 lakhs will be divided between the partners? All will be divided between the partners? All the partners will take all the 10,000? No, they don't do that. Okay, they don't do that. They will withdraw salary. They will retain some money. They will keep some money aside. Say for example, they have withdrawn 5 lakhs. They kept 5 lakh rupees aside. For what? For future expansion. In case they need any money in future, from where will they get? They will have to take loan. They'll have to take money from outside, right? They'll have to pay interest for that. So what the firm used to do is, they will not distribute all the profits. They will keep aside some profit. Okay, so in this case is 5,000. So this will be transferred to general reserve account. Okay, so what will be the journal entry? We have a profit, right? So profit and loss account debit to general reserve. See, we will create our reserve. Okay, 5 lakhs. This will be the journal entry. Okay, so this general reserve basically is the previous year's profits. Okay, so what is the question saying? At the time of admission of a new partner, okay, general reserve appearing in the old balance sheet will be transferred to. Now see, this general reserve, now say for example, A and B are partners. Okay, new partner enters C. Now this profit belongs to whom? This is the hard work of old partners. Do you think new partner should get some share from the old profit? No, he will not get. He will not get any share. Okay, because he is just joining. Now this profit is the profit of the previous years, the hard work of A and B. Okay, so only A and B will get this profit. So now what's the question? Appearing in the balance sheet will be, old balance sheet will be transferred to old partners capital account. Is this right? No, absolutely no. Point number B, new partners capital account. Will new partner get any share from the old profit? No, he will not get any share. Okay, point number C. Let's see point number D first. Gaining partners capital account. Okay, no, this is, we have not learned any concept on gaining partners capital account. Okay, so the right answer will be old partners capital account. Okay, old partners capital account. In which ratio? This is not complete. It should be in old profit sharing ratio. Okay, you will always have to remember the existing profits will be transferred to the old partners capital account in the old profit sharing ratio. Okay, so I hope this is clear. We are done with question number 44. Now let's come to question number 45. Okay, so what's the question saying? At the time of admission of a partner, if goodwill exists in books of accounts, it will be written off among. Okay, if there is any existing goodwill, we will write it off, right? It will be written off between the old partners In which ratio? In which ratio? In old profit sharing ratio. So this is the answer. Okay, this is the right answer. Now your teachers will not teach you why we used to write off goodwill. They will simply say debit goodwill to your to partners capital account. Okay, write off goodwill. But what's the logic behind that? Okay, what's the logic behind that? This is the type of teaching you will get in your school. Okay, they will just make you by heart. They will just make you by heart. You will not be, your concepts will not be clear. Okay, so what will happen? You will face a lot of problems when you go for your higher studies. Okay, if you are studying in a small town in tier 3 cities, tier 2 cities, so you will not have any problem. Okay, all the students will be like that only. But if you go to a higher education, if you go to a big college, if you go to a good college, okay, where students have 98% marks, 99% marks, okay, and they are bright, so for an average student, okay, if you have to, if your CUT exam is very clear, okay, you get full marks, you can get in a very good college, right? So you will be, you will feel left out between them, because their concepts will be clear. Okay, they will be knowing each and every concepts, and you will be like, oh, I have not learned this in the exam in the school, because I know the level of teaching which we get in a state. I know, I'm very aware of that, because I have also passed out from this state only. Okay, so it's very important. Students used to neglect this. Okay, how may if I have to say in Mizo, what will Mizo students say? Sarin na poi mo lawa teacher poi mo law ni melom. Sarin by heart raw teacher kan by heart me ang ni melom. Students used to have that kind of ideology. Okay, so that's completely wrong. Okay, I don't promote that. What I believe is, first concepts, first 3 lectures should be of any chapter should be for concepts. Okay, then only we have to start the questions. Okay, so this should be very clear. I hope this question is clear. At the time of admission of partner, if goodwill exists in the books of accounts, it will be written off among all partners in all profit sharing ratio. Okay, so we are done with question number 45. Now let's come to question number 46. Match list 1 with list 2. Okay, sacrificing ratio will be old ratio minus new ratio. Gaining ratio will be new ratio minus old ratio. Revaluation account, it will be nominal account, because we know that revaluation account is of nominal nature. Okay, it is of nominal nature. It is a temporary account. Okay, I will discuss this later. Okay, when we solve questions on admission. Okay, and admission of a partner, reconstruction of partnership firm. Okay, so this is the answer for question number 46. Okay, note this down. Now before we move to question number 47, let's have a brief discussion on revaluation account. Okay, revaluation account. What is this revaluation account? Let's try to understand. Okay, so what is the nature of the revaluation account? It is nominal account. Okay, so once we understand the nature of any account, okay, it will be very easy for us to solve things. Okay, because we will know the rules. So what are the rules of nominal account? Debit all expenses or losses, credit all income or gains. So this is the rule of nominal account. So when we talk about nominal account, one thing should come to your mind is temporary account. Temporary account. Okay, so what do we mean by temporary account? The balance of this account, balance will be transferred to some other accounts. Okay, transferred to some other accounts. Okay, so what is that account? That will be called as partners capital account. So whatever profit, you will have profit and loss on revaluation, right? So that the profit and loss will be transferred to partners capital account. Okay, so partners capital account is a real account, we know that, right? So the balance of nominal account will be transferred to partners capital account. Okay, now let's try to understand with few examples. Okay, so this is your balance sheet, extract of your balance sheet. So for example, the value of the machinery is 1 lakh in your balance sheet. Okay, now on revaluation, when will revaluation take place? Okay, when there will be reconstruction of partnership firm, basically when there will be admission of a new partner. Okay, reconstruction of partnership firm will be done. Okay, wherein we will check the current market value of the assets and liabilities. Okay, accordingly we will make adjustment on revaluation account. Okay, now see for example, the balance of the machinery in your balance sheet is 1 lakh. Okay, 1 lakh. Now on revaluation we find out that, okay, the machinery is revalued at rupees 1,20,000. Okay, revalued at rupees 1,20,000. Now what has happened, the new value of the machinery is 1,20,000. okay, old value was how much? 1 lakh. The old value was 1 lakh and the new value is 1,20,000. so the difference of 20,000, the difference of 20,000, okay, this will be transferred to the revaluation account. Okay, this will be transferred to the revaluation account. Okay, so once you know the rule, you don't have to think about anything. Okay, so we know that no revaluation is a nominal account, so debit all expenses and losses, right? So all the losses will be transferred to the debit side and all the gains will be transferred to the credit side. Okay, now see what has happened. The value of the machinery was 1 lakh. Okay, now revaluation, the revalued value is 1,20,000. Okay, so the value of the machinery has increased by how much? Has increased by 20,000. Okay, so this is a gain or loss for us? This is a gain for us. This is a gain for us. Okay, so the value of the machinery is increased. Okay, so what will be the journal entry? Machinery account debit to revaluation account. Okay, we will transfer it to revaluation account. So what is the difference amount? Difference amount will be transferred to the revaluation account. Okay, the amount of revaluation, what is the revalued amount, what is the difference, will be transferred to revaluation account. So now this is the journal entry. Okay, now when we are to prepare revaluation account, this is a gain, we know that this is a gain, right? So it will be simply transferred to the credit side. Okay, by machinery, simple, 20,000. Okay, you don't have to think about anything, you just have to know this rule. Okay, and accordingly you will have to make treatment. Okay, now let's take another example. Creditors in the, wait, let's just use the balance sheet only. Okay, now in this, let's see, the value of the creditors was, say for example, 20,000. Okay, now we find out that there is an unrecorded, the adjustment tells you that there is an unrecorded creditors of rupees 1,000. Okay, so for example, there is an unrecorded creditors of rupees 1,000. Now what will happen with this adjustment? There is an unrecorded creditors. Okay, creditors is a liability. Okay, so unrecorded means there was one creditor from whom we had purchased on credit for 1,000 rupees. Okay, we did not record this transaction in our books of accounts. Okay, so we'll have to make adjustment treatment for this. Now the book value of the creditor is how much? The book value is 20,000. Okay, now there is an unrecorded, now we'll have to record this 1,000. Okay, so when we record this 1,000, what will be the plus unrecorded creditors? Okay, so what will be the new value of creditor? It will be 21,000. Okay, so now with this increase, what has happened? We'll have to pay 1,000 extra more, right? So this is a gain or loss for us? This is a loss for us. Okay, so where will this loss go? This will go to the debit side of the revaluation account. Okay, sorry, this I have prepared in revaluation account. Okay, so this 20,000 should be here, creditors, 20,000. so old creditor was 20,000. Old creditor was 20,000. There is an unrecorded of 1,000, so the total will be 21,000. right? Now in your new balance sheet, what will be the value? What will be the value of creditors? It will be, in the new balance sheet, it will be 21,000. Okay, 21,000 creditors. And in the revaluation account, the difference amount of 1,000 will go to the debit side. It is a loss for us, right? So to creditors, simple, 1,000. Now there is a gain of 20,000, there is a gain of 20,000 and a loss of 1,000. So what is the net gain? To 19,000, right? So where will this 19,000 be transferred? This will be transferred to our partners capital account. Okay, to partners capital account. Okay, in which ratio? This will be transferred in old profit sharing ratio. Okay, simple. So this is all about revaluation account. Now it is proof now that this is a nominal account because the balance has been transferred to partners capital account. Okay, so this is all about revaluation account. Okay, now let's move to the questions. Now let's come back to question number 47. Okay, we have to match list 1 with list 2. Now building undervalued, right? So this is the value of the building is, say for example 20,000 in your books. Okay, it is undervalued, it should be 22,000. Okay, it is undervalued, it should be actual amount should be 22, but it has been undervalued. Okay, so what will happen with this? There will be a gain or loss for us. Building was undervalued by any amount, say for example 2,000. Okay, now it was undervalued, now we will make the adjustment of 2,000 rupees, so it will be a gain for us, right? It was undervalued, now the balance will come to the actual value. Okay, the amount will come to the actual value. So what will be the answer for this? It is a gain for us, right? Debit revaluation account, debit all expenses and losses, credit all income and gain. Okay, so this will go to the credit side. This will go to the where? This will go to the credit side of revaluation account. Okay, this will go to the credit side of revaluation account. Okay, it is a gain for us, so it will go to the credit side of revaluation account. Okay, now building overvalued. Okay, building overvalued. Now what do you mean by overvalued? Say for example the value was 20,000 in the books and it is 18,000. Actual amount is 18,000. Okay, so there is a loss of 2,000. Okay, so where will loss go? It will go to the debit side of revaluation account. So it will go to the debit side of revaluation account. Simple, easy. Okay, now capital withdrawn. Capital withdrawn will go to the debit side of partners capital accounts. Okay, drawings. Additional capital will go to credit side of partners capital account. Simple as that. Okay, so this is your answer. You can note this down. Okay, you can note this down. You may have a problem with this, right? Building undervalued and overvalued. It is simple. Undervalued means it has been undervalued in our books. Okay, now we'll have to make the correct, we'll have to bring the building to the correct value. So if it is undervalued, if the value is less than the actual value, so it will be a gain for us, no? It will be a gain for us. So it will go to the credit side of revaluation account, right? In this I have discussed that all the gains will come to the credit side. See, all the gains will come to the credit side. Okay, I hope this is clear. You can note this down if you want. Okay, now let's move to question number 48. Now what is question number 48 saying? Let's read. Calculate goodwill. Now we'll have to calculate goodwill. Okay, if it is to be calculated at 3 years purchase of super profit. Okay, we'll have to calculate goodwill if it is calculated at 3 years purchase of super profit. Okay, the firm started business with a capital of 1,50,000. The normal rate of earning in this class of business is 25%. Okay, so the normal earning is 25%. The firm earned rupees 45,000 as profits during the year. Simple. Now let's try to solve this. Okay, before that let me just give you a brief on types of goodwill. Okay, or methods of goodwill. First one is average method, right? First one is average method. We know that average method. So this average method basically talks about our own profit. Okay, our own profit. We will take our own profit, we will take the average of our own profits and we will calculate goodwill. Okay, so for example we have to calculate goodwill on 2 years purchase of average profit of 3 years. So first year profit will be given, first year, second year, third year profit will be given. Okay, so what we'll have to do, you'll have to take the total of this and divide by 3. You'll get your average profit. Okay, and you will into it by 2 as per the requirement of the question, so you will get the amount of goodwill. Okay, so average, in case of average profit we will take our own profit. Okay, we will take the average, we will take the past year's profit of our own business and we will calculate the goodwill. Okay, now in case of super profit method, what is super profit? Let's try to understand the formula. Okay, you don't have to buy out anything. Super profit, super profit method. So what will happen in super profit method? Super profit means we will compare our profit with others. Okay, the competitor in our business. Okay, in the same class of business. Now what is the formula of super profit? What is the formula of super profit? Super profit is equal to actual profit minus normal profit. Okay, so super profit, the word super means extra profit. Okay, extra profit. So this actual profit will represent our profit. Okay, and normal profit will represent others. Okay, the other profit. Normal means what profits people are earning normally in the industry, in the market. Okay, which, like if we are in the same business, if both are in the business of textile, say for example. Okay, so one is earning 10,000, the other is earning 5,000. So what is the super profit? It is 5,000. Okay, so this is how goodwill under super profit is calculated. Okay, simple. Now there is one more formula for normal profit. How will we calculate normal profit? How will we calculate normal profit? This actual profit will be given. This actual profit will be given in the question, or we'll be able to find it easily. Okay, normal profit. Now what is the formula of normal profit? Normal profit, the formula is capital employed into, see, capital employed into normal rate of return. Okay, normal rate of return. Now what is normal rate of return? The rate on which we will earn profit. Okay, the rate on which we will earn profit. So this is the formula of goodwill under super profit. Okay, so you can note this down if you want to. Okay, so now let's move to the questions based on goodwill. Okay, now let's solve this question number 48. Let's read the question once again. Calculate goodwill if it is to be calculated at 3 years purchase of super profit. 3 years purchase of super profit. Okay, so what is the question? Question number 48. Okay, question number 48. Question number 48. We have to calculate goodwill. Okay, goodwill is equal to 3 into super profit. Question has simply given us, right? Goodwill is equal to 3 into super profit. See, you can see calculated at 3 years purchase of super profit. Okay, so for one person to reach, for Rahul to reach Mukesh Ambani and Nita Ambani will take 3 years. Okay, so in the previous example we have discussed, right? Now the firm started business with capital of 1,50,000. Okay, so this capital is given to calculate the normal profit. The normal rate of earning in this class of business is 25%. So the other people, the other competitor in the industry, our competitor, they are normally earning 25%. Okay, the firm earned, see, actual profit is given. The firm earned 45,000 as profit during the year. Okay, so we know that if we find out the super profit, we'll be able to calculate the goodwill. Okay, so what is super profit? Super profit is equal to actual profit minus normal profit. Normal profit. Actual profit is given 45,000. Okay, actual profit is given, see, 45,000. Now we can calculate normal profit. Okay, now how will we calculate normal profit? 150 is the capital employed into normal rate of return. See, capital employed into normal rate of return. Okay, so the normal rate is 25%. 25%. Okay, so what will be the normal profit? 1,50,000 into 25% is 37,500. See, we are earning 45,000 and others, competitors, are earning 37,500. So what is the super profit? What is our super profit? We are earning 7,500 more than our competitors. Okay, so we can find out the value of goodwill now. So what will be the value of goodwill? 22,500. 22,500. So this is your answer. Okay, so this is your answer. You can note this down. Question number 48. Question number 48. What is the answer? 22,500. Okay, so the answer is 22,500. Okay, I hope this is clear to you. Question number 48. Now let's move to question number 49. Okay, what is the question number 49 saying? Let's read. If average profit employed in a firm is, if average capital employed in a firm is 15 lakhs. Okay, average capital is 15 lakhs. We know that average capital is used for calculating normal profits, right? And fair rate of return in the same industry was 8%. Fair means normal rate of return. Okay, this we can also be called as normal rate of return. Normal rate of return. See, capital employed is 15 lakhs and normal people are earning is 8%. Okay, now goodwill was valued. See, they have given us the value of goodwill now. Goodwill was valued at 90,000 rupees on the basis of 3 times of super profit. Okay, so we have to calculate the average profit of the firm. Okay, so let's make the equation. Question number 49. Question number 49. Okay, so we have to calculate we are given the data of goodwill. Goodwill is equal to how much? See, on the basis of 3 times of super profit. Okay, goodwill is 90,000. Goodwill is 90,000 on the basis of 3 times of super profits. Okay, 3 into, so what is the formula of super profit? Actual profits minus normal profit. Okay, simple and clear. Okay, now we can find out is there anything given about average profit? No. See, the requirement of the question is average profit. We have to calculate average profit. Okay, so with this data, with capital employed and rate of return, we can find out the normal profit, right? So average profit, I will denote it by AP. Okay, this is for average profit. AP is equal to average profit. Okay, average profit means our profit. Okay, minus what is the capital employed? 15 lakhs, and the rate is 8%. Okay, so 15 lakhs into 8%, what will be the normal profit? It will be 1,20,000. Okay, it will be 1,20,000. Okay, now what will happen? 90,000. Okay, we will into 3 into AP and 3 into 1,20,000. Okay, so 90,000 is equal to 3 average profit minus 1,20,000 into 3 will be 3,60,000. Okay, now we will take the 3,60,000 to the left hand side. 3,60,000 is equal to 3 AP. Okay, so you add this to what will you get? 3,60,000 plus 90, you get 4,50,000. Okay, 4,50,000 is equal to 3 average profit. Okay, so 3 average profit is equal to 45,000. Okay, so average profit is equal to 4,50,000. 4,50,000 divided by 3. So what is the average profit? The average profit is 1,50,000. Okay, the average profit is 1,50,000. Simple, right? Average profit, okay, is equal to 1,50,000. Simple as that. Okay, so if you want, you can calculate, you can copy. Okay, pause the video and you can copy this. Okay, so we are done with question number 49. So what is the answer of 49? 1,50,000. Okay, 1,50,000. Simple, right? Now let's move to question number 50. Okay, let's move to question number 50. Goodwill under capitalization method. Okay, now let's have a brief discussion on this. Okay, goodwill under capitalization. Goodwill under capitalization method. Okay, so what is this goodwill under capitalization method? See, in average method and super profit method, right, we were using profits of the firms, profits, right? Now the word itself tells us that we have to use capital of the firm. Okay, see, capital. Okay, capitalization method means we have to calculate goodwill using the capital of the firms. Okay, we have to use goodwill, we have to calculate goodwill, capital of the firm. Now under this method, what will happen? See, there will be two firms, there will be two businesses. Okay, say for example A and B. Okay, so A is earning 1,50,000, B is also earning 1,50,000, but A is earning this 1,50,000 by employing 20 lakh rupees. Okay, and A is earning this 15 lakh rupees. Wait, the rate of return will be very less. Okay, so A is earning 1,50,000 profit by employing 20 lakh of profit capital. Okay, similarly B is earning 1,50,000 of profit by employing how much? Say for example 22 lakhs of profits, 22 lakhs of capital. Okay, now which company, A or B, who is more efficient? Okay, who is more better? See, he have invested 20 lakhs and he is earning 1,50,000. On the other hand, B has invested 22 lakhs and he is earning the same profit of 1,50,000. Okay, so who is more better? I can say A is more better, right? Because he is employing less capital and earning more. He is employing relatively more capital. Okay, so what is the goodwill in this case? Simple, the goodwill is 2 lakh rupees. How? What is the formula of goodwill under capitalization method? Goodwill under capitalization method, the formula is capital normally required minus capital actually employed. Okay, this is the formula under capitalization method. Normally required means people in the industry, okay, they are normally how much did they require, and capital actually employed will represent our capital. Okay, this will represent our capital, this will represent others capital. other players in the industry. Okay, sorry. So I hope this is clear to you. So you can copy the formula. Okay, copy the formula of goodwill. So this is the formula of goodwill. Okay, this is the formula of goodwill and the capitalization method. I hope you have copied. Okay, so now let's move to question number 50. Okay, so now let's discuss question number 50, goodwill and the capitalization method. Very easy and very simple. These are easy marks. Okay, you cannot afford to make mistakes in this type of questions. Now let's read question number 50. A earns rupees 3 lakhs. Okay, A earns rupees 3 lakhs as its annual profit. Okay, so in a year A is earning 3 lakh rupees. Okay, now the rate of normal profit being 10%. Okay, so normally people earn 10% in the market. Okay, in the industry. The asset of the firm amounted to rupees 36 lakhs. Okay, what is the asset of the firm? 36 lakhs, and liability is 12 lakhs. Okay, liability is 12 lakhs. Find out the value of goodwill by capitalization method. Okay, so we have to find out goodwill by capitalization method. Okay, so we have to read the question very carefully. Okay, you have to analyze very carefully. Now see, goodwill under capitalization method. What is the formula? The formula is capital normally required minus capital actually employed. So we will be doing question number 50, right? Question number 50, yes. So let's write the formula first. Question number 50. We have to calculate goodwill, right? Goodwill is equal to, what is the formula? Capital normally required minus capital actually employed. Okay, now let's see the question. Question has given us profits. Profit is how much? 3 lakhs and the rate is 10%. Okay, profit is 3 lakhs, rate is 10%. What do you mean by rate? Rate means the rate of the profits. Okay, now with this rate and profit we can find out the capital. Okay, now the assets of the firm. The assets of the firm amounted to 36 lakhs and liabilities amounted to 12 lakhs. Now in this type of question, the asset of the firm, whose firm? Okay, the firm whose goodwill we are calculating. Okay, this is the data of that firm. Okay, so they have given us assets of 36 lakhs, and liabilities of how much? 12 lakhs. Okay, this is the data which they have given. Now we have to calculate goodwill. Okay, now I hope in class 11 you have learned this accounting equation. Okay, accounting equation. Now there is one equation which says capital plus liability is equal to asset. Okay, wait, let me write it in a full form. There is one basic equation which says capital plus liabilities is equal to assets. Okay, capital plus liability is equal to assets. Now under capitalization method we have to calculate goodwill using the capital, right? Our basic requirement of the question is to calculate capital, to find out the capital of the firm. Okay, but they have given us a data of assets and liabilities, but no problem, we are smart enough, right? We can find out the value of capital. Now let's apply this equation and find out the capital. Okay, we don't know the capital, right? We don't know the capital, but we know the liability. Liability is 12 lakhs and the asset is 36 lakhs. Okay, so what will be the capital? Simple. Capital is equal to 36 lakhs. This will go here. It will be minus 12 lakhs. Okay, minus 12 lakhs. Minus 12 lakhs. So what will be the capital? Capital will be 24 lakhs. Okay, capital will be 24 lakhs. Simple. Now, wait a second. Okay, now see, we have find out the capital actually employed. Okay, so what is the amount of capital actually employed? 24 lakhs. 24 lakhs. Now we'll have to find out capital normally required. Okay, now let's come back to the question. Okay, now the question says A earns rupees 3 lakhs. A is earning rupees 3 lakhs. Okay, and as its annual profits, the normal rate of profit being 10%. So people are normally earning how much? 10%. Okay, in the market. Now I have told you, when I have discussed this capital, these basic concepts, there are two people in the business, in the same category of business. A is earning 1,50,000. A is earning 1,50,000. Array, what's happening? Wait a second. Huh? A is earning 1,50,000 of profit. B is also earning 1,50,000 of profit. So goodwill in the capitalization method will basically depend on the difference of capital. Okay, so profits will be same, but capital will be different. Okay, under this method. So now we can find out the capital of this. Okay, capital normally required. So what will be the capital normally required? How will we find out? See, we have given the profit. Now we have given the profit, we are given the rate. Okay, so we will apply one simple formula of return on capital employed. Okay, this formula you will have to remember. Okay, this formula you will have to by heart basically. So what is the formula of return on capital employed? What do you mean by return on capital employed? How much return, how much profit we will get, how much profit we will get, okay, if we invested this amount of capital. Okay, how much profit will we get, how much profit we will get, okay, if we invest X amount of capital. Okay, we know the profits 3 lakhs. How much profit we will get if we employ this much of capital. Okay, and the rate is also given 10%, and the rate is also given 10%. Okay, so this way I can find out my capital employed. Okay, so wait, let me just write it here. Okay, so this way I can find out my capital employed, normally employed. Okay, by capital employed. I will simply cross multiply. Okay, so 10 capital employed is equal to how much? 3 crores. So capital employed will be divided by 10. So it will be 10 lakhs. Okay, so capital normally required is 10 lakhs. We have find out this, right? So capital normally required is 30 lakhs. Okay, 30 lakhs. See, wait, I have written here 10 lakhs. Now this is not correct. This should be 30 lakhs. Okay, so capital normally employed is 30 lakhs. Capital employed is 30 lakhs. Okay, so we have find out the capital of the other people in the industry. Okay, so now we can find out the goodwill. What will be the value of goodwill? 6 lakhs. Simple. Okay, simple as that. This is how you have to solve. Okay, you don't have to buy out anything. You just have to understand the formula. You just have to understand the concepts. Okay, so now if you want, you can copy this. Okay, you copy this. Okay, so this formula you will use. This is the formula which you will use. Okay, for calculating the capital employed. Okay, simple. You don't have to divide it by 100 or something like that. Okay, that's very confusing for students. Okay, if you are at advanced level, it's fine. Okay, it's very simple to calculate. We can simply calculate in the calculator, but for you, okay, you will have to calculate it this way. Okay, so I hope this is clear to you. Okay, so question number 50, we are done with question number 50. So we are done with question number 50. So what is the answer of question number 50? 6 lakhs, right? The goodwill is 6 lakhs. Okay, simple and easy. Now let's come to question number 51. What is question number 51 saying? A firm earned rupees 6 lakhs as average profit. Okay, so the average profit is given during the last few years. Okay, they have earned an average profit of 6 lakhs during the last few years. Normal rate of return in this class of business is 10%. Okay, normal rate is 10%. Now find out goodwill. Okay, find out goodwill according to capitalization of super profit method if the value of net assets amounted to 36 lakhs. Okay, we don't have to do anything. We just have to simply find out what we have to simply find out the goodwill according to capitalization. Okay, forget about the super profit, they are just given to confuse. Okay, students, so we'll have to find out goodwill according to capitalization method. Okay, now what is the can I just solve it here? I'll just solve it here. Okay, so what is the formula of capitalization method? Goodwill is equal to capital normally required minus capital actually employed. Okay, so the question has given us the profits from 6 lakhs, rate has been given. Okay, now we can find out capital normally required, right? Normal rate is 10%. 10%. So we can find out capital normally required. Okay, now we'll have to find out the value of capital for our business. Okay, we have to find out the value of capital. Okay, we'll have to find out the value of capital. Now how will we solve this? How will we solve this question? Okay, first of all, let's try to understand one thing. Okay, let's try to understand what is this net assets. What is this net assets? Okay, what is net assets? Net assets is assets minus total assets minus liabilities. Total assets minus total liabilities. Okay, total assets minus total liabilities. Total assets minus total liabilities. Okay, now is there anything given about liability? No figure is given. Okay, now in class 11 again you have learned a equation. Okay, equation that capital plus liability is equal to assets. Okay, I have discussed this equation, the same equation. Okay, we talked about. Now is there anything given about capital? No. Okay, we have to find out the capital. Is there anything given about the liability? No, 0. Now what is the assets? 36,000. Net assets is 36,000. Okay, so can I say capital is equal to net assets? Can I say this? Yes, I can say this. Okay, so what is the amount of capital which we have actually employed? It is 36 lakhs. Okay, so 36 lakhs. Now what is capital normally required? We can find out capital normally required is equal to, see, we'll again apply the formula of return on capital employed. Return on capital employed. Okay, what is the formula of return on capital employed? Profits by capital employed. Okay, rate is given. What is the rate? Rate is 10%. 10 by 100. Profit is given. Average profit is 6 lakhs. 6 lakhs by capital employed. Okay, so again we will cross multiply. So what will be the answer of capital employed? It will be 60 lakhs. So capital employed will be 60 lakhs. Okay, capital employed is 60 lakhs. Now it's very easy for me to find out the value of goodwill. Okay, so what is the value of goodwill? 60 minus 36 will be 24 lakhs. Okay, so this is simple and easy. Okay, not so complicated. Okay, so if you want you can copy this. Okay, copy this. Done. Now we have done with 51. See, there are lots of questions, okay, in this unit number 2, because unit number 2 is it covers what it covers retirement, debt, and see, not much question left. Okay, we are left with around 10 to 20 questions. Okay, so unit number 2 covers retirement, death, and what retirement, debt, and admission. Okay, so this 3 chapter of your class 12 topic is in one unit. Okay, so that's why it's taking time, and obviously will take time. So let's be patient and let's discuss it detail. Okay, in detail. So if you solve this, okay, if you watch all the videos, 100% sure your preparation will be done. Okay, now let's move to question number 5. We will leave this question as of now. Okay, I will come back to this question. Now you'll be also given case studies. Okay, case studies will also be given. Okay, so now let's try to solve this case study. It will be very simple. Okay, the question will just make you feel it will be like, what is this? Okay, but if you read the requirement, it's very simple. Okay, now before we move to case study, I will tell you the logic. I will tell you how you have to deal with this case studies. Okay, now a case study will be given. Okay, a question will be given basically. Okay, when you see in your admission retirement questions, so this is basically a question. Okay, question will be given. Okay, other information will be given, and the requirement will be given. See, question number 53, 54, 55, 56, 57. Okay, so this type they will make questions and they will ask you questions based on the above case study. Okay, so the best way to start a case study is, okay, before reading all this, before reading the question, just go through the question first. Okay, see, this is 5 marks now, you will get it for 5 marks. Okay, don't worry, it will not be for 1 mark or 2 marks. So how many questions are there? It will be for much more than that. It may be for 3 marks also. Okay, 2 marks also. So it depends on the pattern of question they set. Okay, so now the best way to start with case study is to read the question first. What is the requirement of the question? Okay, the first requirement is provision for doubtful debts, provision for doubtful debts to be shown in revaluation account. What is the provision of doubtful debts to be shown in revaluation account? So one thing we know is provision. A share of goodwill brought in by C will be how much? We'll have to find out. Creditor to be shown in balance sheet after admission of partner will be how much? Plant and machinery to be shown in revaluation account will be how much? Value of building to be shown in revaluation account is dash and balance sheet is dash. Okay, so we are done with reading the question. Okay, now let's go to the case study. Okay, let's go to the case study. Now see, A and B are two partners. A and B are two partners dealing in manufacturing steel, sharing profits in the ratio of 2:1. Okay, they are sharing profits in the ratio of 2:1. They are enjoying a high demand of its product. Okay, as economic growth is about 7 to 8% and the demand of steel is growing. Okay, it is planned to set up a new steel plant to encash on the increasing demand. What do you mean by this? They are just giving you a story. Okay, it's of no use. Okay, this part, they are enjoying a high demand on this product. Okay, so this part is basically useless. Okay, this part is basically useless. It is estimated that it will require 1 lakh rupees. Okay, so they admitted C as a partner on the date of admission. Balance sheet is as follows. Okay, now to start a new plant, okay, they have seen a growth. Okay, now they have decided to encash. Okay, they have decided to take the opportunity. Okay, and they are in requirement of 1 lakh rupees, so they decided to admit C as a partner. Simple. Now the balance sheet has been given. See, balance sheet has been given. Let's see the liability side first. Bills payable. I have again discussed this. Okay, this point, bills payable and bills receivable, bills of exchange. Okay, I have discussed it in the best way possible. Okay, taking the real life example, how actually we deal these things in real life. Okay, you can go and watch that in the basic lecture. Okay, it was very interesting. Okay, now sundry creditors has been given. Sundry creditors has been given. Okay, 58,000. Outstanding expenses, again I have discussed this also, outstanding expenses in detail. Okay, students just used to buy hard. Okay, if there is outstanding expenses, you add to the P&L account. If there is prepaid expenses, you minus from the P&L account. No, I have discussed it in detail. Okay, you can go and watch that. Capital is given 1 lakh 80 and 1 lakh 50. Okay, so balance is total is 4 lakh. Now in the asset side, cash in hand is given 10 lakh, cash at bank 40,000, sundry debtors 60,000, stock 40,000, plant and machinery 1 lakh, building 1 lakh 50,000, total 4 lakh. Okay, so this is the balance sheet which we are given. Now come to other information. C will bring 1 lakh. See, the requirement was 1 lakh, so C will bring 1 lakh. Okay, as capital and 60,000 as his share of goodwill for 1/4. 60,000 share of goodwill for 1/4 share in profit. Okay, we know that this 1 lakh will go to partner's capital account, will go to C's capital account, and this goodwill will go to the sacrificing partner's capital account in the sacrificing ratio. Okay, now point number 2, plant to be appreciated to rupees 1,20,000 and the value of building to be appreciated by 10%. A provision for doubtful debts is to be created at 5% of debtors. Okay, provision we have to create. Creditors are unrecorded to the extent of 1,000. On the basis of above, answer following. Above study, answer the following. Okay, simple data is given. So now let's answer the following. Now question number 53. Provision for doubtful debts to be shown in revaluation account. What is the provision for doubtful debts? See, point number 3. Point number 3 says a provision for doubtful debts is to be created at 5% of debtors. Okay, so what is the value of debtors? 60,000. So what will be the provision? Provision will be 60,000 into 5%. 5%, how much? 3,000. Okay, so 3,000 is the answer. See, simple as that. Okay, this is the type of question you will get. Now question number 54. As share of goodwill brought in by C will be, basically they are talking about the goodwill. Okay, so C is bringing in goodwill of 60,000. Okay, so this goodwill will be distributed between the sacrificing partners in the sacrificing ratio. Okay, is there anything mentioned about sacrificing ratio? No, right? There is nothing mentioned about new ratio or sacrificing ratio, so we cannot find out the sacrificing ratio. Okay, so what will we do? We will distribute it in this ratio, 2:1. Okay, so what is the value of goodwill? 60,000. Okay, ratio is 2:1. Okay, 60,000. Okay, Goodwill is 60,000. Ratio is 2:1. Okay, so how much A will get, how much B will get? 60,000 into 2/3, 60,000 into 1/3. Okay, how much? 40 and 20. 40,000 and 20,000. Okay, so what was the requirement of the question? A's share of goodwill brought in by C. What will be A's share of goodwill? It will be 40,000. Simple, right? The answer will be 40,000. Okay, simple and easy. You want to note this, you can note this down. Okay, now let's move to question number 55. Okay, creditors to be shown in balance sheet after admission of partner will be, what is the question? Creditors to be shown in balance sheet, okay, not in revaluation account. Read this carefully. To be shown in balance sheet after admission of partner will be, okay, see, there is a creditor 58,000. Creditor is of 58,000, right? And point number 4 tells us that there is an unrecorded creditor to the extent of 1,000. Okay, what do you mean by unrecorded? This 1,000 we have purchased. Say for example, we have purchased something from the on credit. Okay, we have a credit purchase, but we forget to record this transaction. So old value was 58 and there is 1,000 increase. So what will be the value of creditors? 59,000. How did I get this? 58,000 in balance sheet plus unrecorded 1,000. Simple and easy. Okay, now question number 56. Plant and machinery to be shown in revaluation account. Okay, so what is the adjustment? What is the data given on plant and machinery? Let's see. What is point number 2 saying? Plant is to be appreciated to rupees 1,20,000. Okay, so what was the value of plant in the balance sheet? 1 lakh. Okay, the book value is 1 lakh. Okay, and the market value, the new value is 1,20,000. So there is a gain of 20,000. Okay, so where will this gain go? It will go to revaluation account. Okay, so plant and machinery to be shown in revaluation account is 20,000. Simple and easy. Okay, now question number 57. Okay, value of building to be shown in revaluation account. What is the value of building to be shown in revaluation account? Now see what is the data given on building. Okay, and the value of building to be appreciated by 10%. Okay, value of building to be appreciated by 10%. Okay, so what is the value of building in all balance sheet? It is 1,50,000. See, 1,50,000. And what is the information given? It is to be appreciated. Appreciated means we have to increase the value of building by 10%. Okay, so what is 10% of 1,50,000? 1,50,000 into 10% is 15,000. Okay, 15,000. So what will be the new value of building? It will be 1,65,000. Okay, so what's the question? Value of building to be shown in revaluation account is 15,000 because there is increase of 15,000 only, and the new balance to be shown in balance sheet is 1,65,000. Okay, see how easy. Okay, so this is how we will solve this case study. Okay, case study is also done. Simple. Okay, if you want you can copy this. Okay, so PDF is very important. Okay, if you don't have the PDF you will have problems. Okay, because this type of questions we cannot waste, so we cannot spend too much of time now. We have to do first. Okay, because there are a lot of questions. Now let's come to distribution of accumulated profit and reserves, profit or reserves. Okay, so now let's have a brief discussion again. Okay, what is accumulated profits and what will be the distribution when a new partner is admitted or a partner retires or something like that. Okay, now see, we are talking about admission. Now let's just talk about admission. Okay, so there is a balance sheet given in the question. Okay, there were two partners A and B. They were sharing in the ratio of 2:1. Okay, now balance sheet is given. Balance sheet is given. Okay, so you'll have your assets here, you will have your capital here. Okay, and you will have your profit and loss here, general reserve. Okay, this is on 31st/3/2023. Okay, now I've told you what is general reserve, right? I've discussed P&L, profit and loss will be the total profit. Okay, this may include the previous year's profits also, and general reserve means out of the profit earned how much we have kept aside, okay, for emergency use. Now on 1/4 C is admitted. On 1/4 2023. Okay, now when C is admitted, what will happen? There will be reconstruction of firm, reconstruction of partnership firm, right? Partnership firm will be reconstructed because C has come into the business. Now there will be change in profit sharing ratio, obviously, right? Now what about the profits? What about this profit? Okay, what about this profit? What will be the treatment of this profit? Okay, now a simple question, answer this to yourself. Okay, whose right should be there in this profit? Okay, who has earned this profit? Whose hard work is reflected in this profit? It is the hard work of A and B only. A and B only, no other, no other partner. Okay, only A and B. Now don't you think that when C is admitted, this profit and reserves should be credited to old partners capital account, right? This should be credited to the old partners capital account. Why? Because if we did not transfer these profits and reserves, what will happen? C will join the business, right? So in future, C will say that this profit, I have also, this profit belongs to me also. You have to distribute it to me also. Okay. So what will happen? This profit will be transferred to the old partners in their old sharing ratio. Okay. So you will write a note if you want. Reserves, accumulated reserves. Okay, accumulated profit or reserve. Accumulate means different years profit. Okay, 2021, 22, 2020, 2019. So all the profits which are not distributed will be called as accumulated profit. Okay, so accumulated profits or reserves, okay, in the old balance sheet, will be transferred to the credit side of old partners capital account in the old profit sharing ratio. Okay, so you note this down if you want. Okay, accumulated profit or reserves in the old balance sheet will be transferred to the credit side of old partners capital account in the old profit sharing ratio. Okay, simple, easy. Now let's move to the questions. Okay, let's move to the questions. Now let's read the question number 58. What is question number 58 saying? A and B are partners, okay, sharing profits and losses in the ratio of 2:1. Okay, C is admitted for 1/4 share. Following is the extract of balance sheet. As on 31st, 2023. Okay, this is the extract. Extract means only a few parts. Okay, all the balance sheet will not be given. Now capital A and B is given, profit and loss is given, general reserve is given. Now what is the requirement? Distribute the accumulated reserve between the partner. Okay, how will we distribute? How much will A and B get? Let's see. Okay, profit and loss, I'll just solve it here. Okay, A, B. See, what is the amount of profit? 1 lakh. Now this will be shared in old profit sharing ratio. Old profit sharing ratio is 2:1. Okay, so how much will he will get? How much will he get? He will get 6666. Okay, 66,666. Okay, and how much B will get? B will get 33,334. Okay, so the total will be 1 lakh. Now let's talk about general reserve. This is also a reserve, this is also a profit kept aside. General reserve means profit kept aside. Okay, so general reserve, again they will get A and B, 2 lakhs into 2/3 into 1/3. Okay, so 1,33,333. okay, minus 66,667. This will be okay. So this is the treatment of accumulated reserves. Okay, now if you want, you can pause the video and you can note this down. Okay, So I hope you have understood this. Now we are done with question number 58. Now let's come to 59. Okay, this is also on distribution of reserves. Okay, now let's read the question. A and B are partners. A and B are partners sharing profits and losses in the ratio of 2:1. Okay, C is admitted for 1/4 share. Following is the balance sheet of A and B as on 31st 2023. Okay, capital is given A and B. General reserve is given of 1 lakh. Plant and machinery is given 3 lakhs. Stock is given 50. Debtors is given 50. Profit and loss debit is given 2 lakh. Now profit and loss is in the debit side, so this will represent loss. Okay, this will represent loss. I hope you know this. Okay, that profit and loss in the debit side will be a loss. Okay, now let's distribute this among the partners. Okay, let's distribute this among the partners. Now question number 59. Okay, 59. Question number 59. Okay, A and B, what is the ratio? 2:1. Okay, 2:1. General reserve of 1 lakh. So general reserve is basically a gain, is a profit, right, kept aside, 1 lakh. Now A and B, so 1 lakh into 2/3 into 1/3. Okay, so what will be the answer? 66,667, 33,333. Okay, so this is a profit. Okay, distributed. So this will go to the credit side of partners capital account, old partners. Okay, old partners, which means A and B. Now let's talk about profit. Let's talk about loss of 2 lakh rupees. What will be the treatment? Okay, profit and loss, this is a loss. Okay, so 2 lakhs. So what will happen? How much will A bear the loss? 2 lakhs into 2/3 into 1/3. Okay, so what will be the answer? 1,33,333 minus 66,667. Okay, so this is how it will be. So now this will go to, this will be in the bracket. Okay, the question may trick you. Okay, giving different types of options. So one will be in bracket, other one will not be in bracket. So this loss will be in bracket. Okay, so this will be transferred to debit side of partners capital account. Okay, old partners. Okay, so there is profit of 1 lakh and loss of 2 lakhs. So there will be net loss. Okay, there will be net loss. How will we find out the net loss? A and B. Okay, there is a loss of, see, there is a loss of 1,33,333 and a profit of 66,667. 66,667 minus 1,33,333. So what is the net loss? 66,666. Okay, and for B it is 33,000. See, 33,333 and loss of this 33,333 minus 66,667. Okay, so 1 2 3 4 5 minus 66,667. So loss of 33,334. Okay, so this will be your final answer. Okay, if you want you can copy this down. Okay, so now let's see question one case study. Okay, R and S were partners in your firm, sharing profits in the ratio of 3:2. Their capital were 5 lakhs and 3 lakhs respectively. They wanted to expand their business, so they admitted M as a new partner on 1st April 2020 for 1/4 share in the future profits. M acquired her share equally from R and S. Okay, so what will be the sacrificing ratio? 1:1. See, equally now, sacrificing ratio will be 1:1. Okay, M brought rupees 2 lakh as capital and rupees 1 lakh for premium for goodwill in cash. At the time of admission, general reserve amounting to rupees 50,000 and profit and loss amounting to rupees 90,000 appeared on the liability side of the balance sheet. Okay, now on the basis of above, answer the following. We have to answer some questions on the basis of this case study. Okay, so now let's see. The journal entry for distribution of general reserve at the time of admission of M will be, okay, what will be the journal entry? Now before that, let's see that the reserves, okay, the reserves, the profit and loss and the profit and losses and general reserve, okay, appearing in the old balance sheet will be credited to old partners in their old PSR, right? We know this, right? So what is this? Normally we can say accumulated profit and losses or general reserve, right? So all the years before a new partner is admitted, old partners, okay, they have worked hard, they have earned this profit. Okay, so who will be entitled to this accumulated reserves? The old partners, right? So in which ratio will we divide this accumulated reserve? In the old profit sharing ratio between the old partners. Okay, so see what's the requirement of the question. Question number 60. The journal entry for distribution of general reserve at the time of admission of M. Okay, so basically we have to pass a journal entry for distribution of general reserve, right? So general reserve will have credit balance. So when we distribute this to all partners, what will be the journal entry? General reserve account debit, general reserve account debit to old partners. Who are the old partners? RNS, and 3:2 is the ratio. Okay, to R's capital account to S capital account. So question number 60. Okay, so what is the amount of general reserve? See, general reserve amounting to 50,000. Okay, general reserve amounting to 50,000. So 50,000, the ratio is 3:2. Okay, so what will be the ratio? 3:2. 3:2. So how much will R get? 50 divided by 5 into 3. R will get 30,000 and S will get 20,000. Okay, so this is the journal entry for, this is the answer for question number 60. Okay, now question number 61. At the time of M's admission, okay, what will happen? Let's see. Okay, old firm will be dissolved, right? When a new partner is admitted, will the old firm dissolve? No, right? The firm will carry on, the firm will continue, a new partner will be admitted, right? So the firm will not be dissolved. Old partnership will be dissolved. Is this correct? No, this is not correct, right? So see, in this example, R and S are partners, right? And M is admitted, so R and S and M will be the new partners, right? So the old partners will continue to be members, right? Will be continue to be partners. So old partnership will also not dissolve. So this is also not the right answer. Old partnership will be reconstructed, right? So this is the right answer. Okay, now let's see point number D. New profit sharing ratio will be equal. New profit sharing ratio will be equal. Can this be? No, new profit sharing ratio will never be equal, because one will sacrifice, right? Or two partners may sacrifice for the new partner who is being admitted. Okay, so new profit sharing ratio will never be equal. Okay, now the right answer for this is C, right? Old partnership will be reconstructed. Okay, now let's move to question number 62. Goodwill brought in by M will be distributed in the ratio. What will be the ratio? See, we have seen in the case study that M, see this part, okay? M acquired her share equally from RNS, right? Equally. So what is the ratio? 1:1, okay? Equally, 1:1. Now let's move to question number 63. At the time of admission of a new partner, decrease in the value of assets is credited to, in which account it is credited? At the time of admission of a new partner. We know that when a new partner is admitted, we will prepare revaluation account, right? Question number 63. Okay, we will prepare a revaluation account. When will we prepare revaluation account? When there is a change in profit sharing ratio, or basically we can say when there is reconstruction of partnership. So when there will be a reconstruction of partnership, when a new partner is admitted. Okay, so what is the question saying? Let's see. What's the question saying? At the time of admission of a new partner, decrease in value of assets is credited to, okay, which account? It is credited to revaluation account. Okay, so what is the answer? Revaluation account. At the time of admission of a new partner, decrease in the value of assets is credited to which account? Basically this should be debited. This is wrong, this is wrong, this is debited. Decrease in the value, right? If there is a decrease in value of assets, wait one second, if there is a decrease in value of assets, if there is a decrease in value of asset, it will be debited, right? So debit side is for all expenses or losses, and credit side is for all income and gain. We know that revaluation account is a nominal account. Okay, it is a nominal account. So decrease, where will decrease go? Revaluation. What will be the journal entry? See, revaluation account debit to assets account, right? So basically it will go to the debit side. Okay, so what is the answer? This is debit side. Okay, at the time of admission of new partner, decrease in the value of assets is debited to revaluation account. Okay, this is the answer is revaluation account. The revaluation account. Okay, now let's see question number 64. Question number 64. A, B and C are partners in a firm sharing profits in the ratio of 3:2:1. Okay, 3:2:1. C retires. Now basically we are talking about retirement. Okay, so before we move with this question, let me just tell you one thing. Okay, retirement. Now we are done with admission. Okay, now let's see in case of retirement. Okay, so when a partner retires, a partner is retiring. Okay, retirement of a partner. Okay, retirement of a partner. This was only one. Yeah, okay, retirement of a partner. Okay, now see what will happen in case of retirement of a partner. I have to tell you a few things, okay, regarding goodwill and regarding the amount distributed to partner. Okay, so let's talk about goodwill. Okay, now we know that at the time of admission, what will happen? A new partner is admitted. Okay, a new partner is admitted. The new partner will bring in his share of capital and goodwill. Okay, capital will go to new partner's capital account. Okay, and where will goodwill go? To the credit side of sacrificing partner's capital account. Okay, in which ratio? In sacrificing ratio. Okay, we know that, right? Now see, in case of retirement, what will happen? In case of retirement, okay, in case of retirement, there will be no introduction of capital, right? So this part will not be there. Now we have to talk about goodwill. Okay, I have to tell you a few things about goodwill. Now what will happen? See, goodwill of the, okay, the retiring partner, write it this way. Okay, the retiring partner will get his share of goodwill from the gaining partners. Okay, gaining partners. Okay, now say for example there are three partners, A, B and C. Okay, C retires. Now after C's retirement, okay, all the profits will be enjoyed by A and B. Okay, all the profits will be enjoyed by A and B. Okay, so C is retiring, right? He is leaving his share, right? So she should basically get his share of goodwill. Okay, from whom? From the gaining partners. Okay, now you cannot say that from the all partners. Okay, say for example there are three partners and A is only A is only gaining. Okay, so only A's account will be debited and C's capital account will be credited. If both are gaining, so A, B A and B's capital account will be debited to C's capital account. Okay, so you cannot say that retiring partner will get a share of goodwill from the old partners. Okay, that's the statement is wrong. You will have to say the old partners. See, I have written down. Okay, the retiring partner will get his share of goodwill from the gaining partner. Okay, in which ratio? In the gaining ratio, basically. Okay, now I hope this is clear. And one more thing, when you prepare partners capital account, okay, so for example, this is the partners capital account. Now by BD you will have your balance, opening balance. Okay, say for example, a partner is getting salary, partner is getting interest on capital by profit sharing. Okay, all these things is getting. Now there are three partners, A, B and C. Okay, C is retiring. Okay, now A and B will continue with the business, right? So A and B will have their closing balance of capital account. Okay, now will C have the closing balance of capital account? Right? No, he is retiring, he is leaving the business. Okay, so he cannot have the closing balance of capital, right? Whatever payable to C, right, we will add all this balance. Okay, balance of capital, salaries, interest on capital, profit, what his share of profit is. If there is any drawings, okay, it will come here. If there is any interest on drawings, if there is any loss, it will come here. Okay, and at last, whatever is payable to him, the net amount payable to him, credit side minus debit side, will be transferred to his loan account. Okay, C's loan account. Okay, this depends on the question. The question may say that, say for example, 1 lakh is payable to C. Okay, question may say that payment has been done instantly. Okay, so if payment has been done instantly, cash will come here. Okay, you'll make the payment through cash. But if question is silent, you will transfer it to C's loan account. Okay, this will be transferred to C's loan account. Clear? I hope this is clear, right? So what will be the journal entry? C's capital account debit to C's loan account. Okay, so see, you are debiting his capital account. Basically, liability is gone. Okay, liability is finished, and a new liability of C's loan is created. Okay, so I hope this is clear to you. Simple and easy, right? Now let's move to this question. Okay, let's read the case study again. A, B and C are partners in a firm sharing profits in the ratio of 3:2:1. Okay, C retires and the balance of his capital account after making necessary adjustments on account of reserve and surplus. Okay, on account of reserve and surplus, revaluation of assets and liabilities works out to be 60,000. So the amount payable to C on the retirement was 60,000. Okay, 60,000. Now A and B agreed to pay him rupees 75,000 in full settlement of his claim. Okay, it implies that rupees 15,000 is okay. Now what is this rupees 15,000 extra? Now what was the amount payable to C? Question number 64. Okay, question number 64. Okay, so see, amount payable to C was how much? See, 60,000. Okay, 60,000. And what is the amount paid? Is equal to 75,000. So they have paid 15,000 extra. So the question is asking, what is this 15,000 for? Okay, let's see the options. C's salary for the time period. Can this be the right answer? C's salary for the time period. No. C's loan. That's not the right answer. C's share of goodwill. C's share of profit, right? So what will be the right answer? The right answer will be C's share of goodwill. Okay, so this is the right answer, C's share of goodwill. Salary, loan and C's share of capital. This is not right. This is not right. Share of profit. Okay, so the extra which they have paid is for the goodwill. Okay, because see what will happen when they make payment. Now when they prepare the partner's capital account, when they prepare C's partner's capital account, by balance BD, okay, the capital balance, by salary, by what is the other option? Profits. Okay, so this amount payable will be after taking into account all these things. Okay, see what has the question said. C retires and the balance of his capital account after making necessary adjustments on account of reserve and surplus, means on account of profit and loss. So profit and loss adjustment has been made, right? Profit and loss adjustment has been made. Revaluation of assets and liabilities have been made. Okay, and after all this adjustment have been made, the amount payable is 60,000. Okay, so the right answer for this will be his share of goodwill. Okay, question number 64. Now we are done with question number 64. Now let's come to question number 65. What is the question number 65 saying? Let's see. AR and V are partners sharing profits in the ratio of 5:3:2. Okay, if V retires, the new profit sharing ratio between A and R will be, okay, we have to calculate the new profit sharing ratio. Okay, so what is the old ratio? 3:2. Let's solve this. Okay, let's just solve this. So question number 65. Question number 65. Old ratio between whom? A, R, V. Old ratio between A is to R is to V is 5:3:2. 5:3:2. Now who is retiring? V is retiring. Okay, V is retiring. Now V retires. Okay, V retires, and the new profit sharing ratio between A and R will be. See, the question is asking us the new profit sharing ratio. So what is the simple answer? If V retires, nothing is given regarding the new profit sharing ratio or sacrificing or gaining ratio. So what will be the new ratio? It will be 5:3. Simple. Okay, 5:3. This is the right answer. Now let's come to question number 66. Question number 66. Okay, on retirement of a partner, the retiring partner's capital account will be credited with, okay, the question is asking us, on retirement of a partner, the retiring partner's capital account will be credited with. First option is his or her share of goodwill. Yes, right, it can be. Now when you prepare your partner's capital account, by what? By gaining partner, gaining partners. Okay, gaining partners. This is for goodwill. What used to be the journal entry? Gaining partners to retiring partner, right? So this will go to the credit side, right? So first option is yes, this can be right. Goodwill of the firm. Will the retiring partner get goodwill of the firm? No, he will not get the goodwill of the firm. This option is not correct. Now share of goodwill of remaining partners. Will a retiring partner get share of goodwill of remaining partners? No, he will get his share only. Okay, his or her share of goodwill and share of goodwill of remaining partners. Okay, is this the right option? No. So the correct answer is A, his or her share of goodwill. Okay, now let's come to question number 67. What is this question saying? Let's see. Journal entry to be passed for unrecorded assets. Okay, journal entry to be passed for unrecorded assets for preparing revaluation account at the time of retirement of a partner will be, what will be the journal entry? Simple. Assets is not recorded. Now we'll have to record the assets. Okay, so if we record the assets which was unrecorded, the value of assets will increase, right? And we know the rule that increase in assets will always be debited. Increase in the value of assets will always be debited. Okay, so what will be the journal entry? Assets account debit to what? Now when you purchase an asset, what will be the journal entry? Assets account debit to cash, because cash is going out, right? You are purchasing an asset and you are giving cash. Okay, but this is an unrecorded assets. Okay, cash has already gone out. So what will be the right journal entry? We will transfer it to revaluation account. Okay, see, assets increasing, debit, it has debit balance, so increase in assets will be debited, and revaluation account is a nominal account, debit all expense losses, credit all income or gains. Okay, so this is a gain, right? Our value of assets is increasing, so this will be the right journal entry. Okay, assets account debit to revaluation account for question number 67. I hope this is clear. Now question number 68. Let's read this. At the time of retirement of a partner, the remaining gaining partners should compensate the, okay, at the time of retirement of a partner, okay, the remaining gaining partner should compensate the, the remaining partners will compensate to whom? Okay, we have to see this. Remaining partners only. Okay, will the remaining partners compensate the remaining partners? No, this will not be the right answer. Retiring partners only. Will this also be a right answer? Compensate basically means value of goodwill. Okay, the question is talking about goodwill value. Okay, who will get the goodwill in case of retirement of a partner? Okay, who will sacrifice and who will get the benefit? Okay, basically the question is saying no, this also will not be a right answer, because the right answer will be C. Retiring partner, okay, retiring partner will obviously get his share of goodwill, as well as remaining partner who have sacrificed, okay. Sacrificing partner, no, this is also not right answer. So C is the right answer. Retiring partner as well as remaining partner who have sacrificed, right? You have noted this down, I guess. Okay, see, the retiring partner will get his share of goodwill from the gaining partner. Okay, only the gaining partner will basically compensate. Okay, so retiring partner will get his share of goodwill from the gaining partner. Okay, and any partner who is sacrificing will also get the share of goodwill. Okay, so I hope this is clear. So the right answer is of question number 68 is point number C. Okay, now let's go to question number 69. Question number 69. If a partner retires in the middle of the year, okay, if he retires in the middle of the year, his or her share of profit from the date of last balance sheet till the date of the retirement will be transferred to which account? Okay, let me explain this first. Question number 69. Question number 69. Okay, now let's talk about question number 69. Okay, now see, say for example, question has prepared balance sheet. Okay, question has prepared balance sheet for 31st/3/2023. Okay, now question has given you data for this according to this balance sheet. Okay, question has given you information according to this balance sheet on 31st/3/2023. Now say for example there are three partners A, B and C. Okay, now C dies. Okay, C dies. Okay, so now say for example, when will the year start? The year will start on 1/4/2023. Okay, and it will end on 31st/3/2024. So for example, okay, now say for example on 1st October 2023 C dies. Okay, C dies at this point. Okay, on 31st/10/2023. Now what will happen? See, C has also worked. She has worked for this period. No, she was working for this period. Okay, now do you think the firm would have earned any profits during this period? Yes, obviously, right? The firms would have earned profits during this period. Now when will the profit of the firm be calculated? When will the profit of the firm will be calculated? At the end of the year, on 31st/3/2024. Basically after 31st/3. Okay, in real life it is to be after 31st/3/2024, but at your level to understand, you'll have to understand that profit will be calculated at this period, at the end of 31st/3/2024. Okay, now you may say, why don't the firm calculate profit at this period? Because see, at the year end on 31st/3/2024, we'll have to see the outstanding and salaries. Okay, we have to provide for the outstanding rent, outstanding salaries, right? We have to make provisions. We have to make provisions. Then if there is any other items related to, it may be anything, it may be advances, right? So all this adjustment will be done on the year end. Okay, so it is not practically feasible for any business to calculate profit at this period. Okay, now what will the firm do? The firm has one option. Okay, see, she was a partner. Okay, she died on the middle of the year. Okay, now what the firm will do, what the business will do, they will take the profits of the last financial year. Okay, they will take the profits of last financial year. They will take the profits of last financial year. Okay, they will take the profit of last year, and on the basis of the last year profit, okay, what will the firm do? The firm will pay C his share of profit. Okay, for the period starting from 1st/4 to 1st/10/2023. Okay, now one question to you. Okay, is this profit which the firm has calculated, okay, a real profit, a actual figure of the current year? No, right? Because the profit has been taken for this period. The profit has been taken on the basis of last year's profit. Okay, on the basis of last year's profit. Okay, so this cannot be the accurate amount. Okay, so now what will the firm do? Will the firm debit profit and loss account? Can the firm debit profit and loss account? No, the firm cannot debit profit and loss account, because see, we have not yet calculated any profit for this period. Okay, for this period, no profit has been calculated for this period. Okay, No profit has been calculated for this period. So the firm has one option. Okay, what will the firm do? The firm will create a new account called as profit and loss suspense account. Okay, the firm will create a new account called profit and loss suspense account. Now they will create this account. Okay, they will create this account, and this account will be basically temporary. Okay, so on the year end 31st/3/2024, the firm will have to close this account. Okay, P&L suspense account. This P&L suspense account cannot stay in the balance sheet. Okay, the firm will close this account. So the firm will create a new profit, and the firm will create a new account called as profit and loss suspense account. Okay, and what will be the journal entry? Profit and loss suspense account to what? C is capital account. Okay, so the profit for this period, okay, C will get the profit for this period, and this will be the journal entry. Okay, I hope this is clear to you. Now let's see this question. Okay, if a partner retires in the middle of the year, his or her share of profit from the date of last balance sheet till the date of retirement will be transferred to P&L credit side. Can this be the right answer? No, right? P&L suspense account debit side. Retiring partners account debit side. No. Okay, because it will be transferred to the credit side. See, when you prepare a partner's capital account, when a partner's capital account is prepared, okay, so profits will go to all the items which reduces the balance of capital will go to debit side. All the items which increases the balance of the partner will go to the credit side. So profit and loss is basically increasing the balance, right? So it cannot be credit side. Okay, so retiring partners debit side, this cannot be the right answer. Okay, profit and loss suspense account credit side, this also will not be answer, because what is the journal entry? Profit and loss account debited, we will debit profit and loss account. Okay, so what will be the right answer? The right answer will be B, profit and loss suspense account debit side. Okay, so this is the answer for question number 69. I hope this is clear to you. Okay, now let's move to question number 70. What is question number 70 saying? R, S and K are partners sharing profits in the ratio of 4:3:2. R retires. Okay, S and K decided to share profits in future in the ratio of 5:3. Gaining ratio of S and K will be C. We can start solving here only. Okay, or we'll do it in the, so let's do it here only. So what is the old ratio? Old ratio between R and S and K is 4:3:2. Okay, who is retiring? R is retiring. See, R is retiring. Okay, so what is the new ratio? New ratio between S and K is 5:3. We have to calculate gaining ratio. Okay, so what is the formula for gaining ratio? Gaining ratio is equal to new ratio minus old ratio. Okay, so what will be S gaining ratio? New ratio is 5/8. 5/8 minus what is old ratio? 3/9. 5/8 and 3/9. Okay, so if you solve this, it will be 45 minus 24 divided by 72. Okay, and this will be 21/72. Okay, now let's see for K. What is the new ratio? 3:8. 3/8 minus 2/9. Okay, so if you solve this, you will get 27 minus 16, 72 is equal to 11/72. So what will be the gaining ratio between S and K? 21:11. Okay, so this is the answer for question number 70. I hope this is clear to you. Okay, now let's move to question number 71. Now we'll have to match list 1 with list 2. Okay, so these are the item of list 1 and these are the item of list 2. Okay, now where will unrecorded creditors go? Unrecorded creditors, now we have to understand, okay, what is an unrecorded creditors. So for example, we have purchased goods worth rupees 11,000. Okay, we had purchased goods worth rupees 11,000, but out of this 11,000 you recorded only 10,000. Only 10,000 was recorded. Okay, so 1,000 is unrecorded creditors. Okay, now when you record this unrecorded creditors, what will happen? Your liability will be increased. Right? So what is this? If it is if your liability is increasing, it is a gain or loss for you. Basically it is a loss for you. Okay, so where will this go? Will this go to debit in partner's capital account? No, right? Will it go to nominal account? Is this item of nominal account? I don't think so, right? Because creditors is a real account. Okay, creditors is an item of real account. So is this an item of, this is not the answer, this is not the answer. Is this an item of revaluation account debit side? Yes, right? So where will you transfer this unrecorded creditors? You will transfer this unrecorded creditors to the debit side of revaluation account. Okay, because revaluation account is a nominal account, debit all expenses and losses. So this is a loss, so you will transfer it to the debit side of revaluation account. Okay. Advertisement expense, advertisement suspense account, where will this go? This will go to debit side of partners capital account. Okay, debit side of partners capital account. Where will building undervalued? Building undervalued means in your books the value of building is 10,000, but when you have, when you revalued the building, you find out that the value of the building is 11,000. So 1,000 is the unrecorded value. Okay, so is this a gain or loss for you? It is a gain for you, because the earlier the value was 10,000, now it has been increased to 11,000. So 1,000 is a gain. Okay, it's a gain for you. The value of your asset is increasing. Okay, so where will this go? This will go to the credit side of revaluation account. It will go to the credit side of revaluation account. Why? Because revaluation account is a nominal account, debit all expenses or losses, credit all income or gain. So this basically is a gain for us, so it will go to the credit side of revaluation account. And point number D, revaluation account. Revaluation account, what will be the right match for this? It will be nominal account, because we know the rule. Okay, revaluation account is a nominal account. So this is the answer for your question number 71. I hope this is clear to you. Okay, so now let's move with question number 72. Let's see what is question number 72 saying. Now let's read this question. PQ and R are partners in a firm, sharing profits equally. Okay, they are sharing profits equally. R retires and balance in his capital account after making necessary adjustments on account C, on account of reserves, revaluation of assets and liabilities work out to be 60,000. Okay, 60,000. Now what's the question saying? Further, let's see. P and Q agreed to pay him 75,000. Amount payable was 60,000, but P and Q paid him 75,000 in full settlement of his claim. Okay, now we have to find out total value of goodwill of the firm. Okay, what will be the total value of goodwill of the firm? Okay, now let's see what's the question saying. Okay, question number 72. Question number 72. Question number 72. Okay, what was the amount payable? Amount payable is, what is the amount payable? 60,000. Okay, amount payable 60,000. And what is the amount paid? Amount paid is 75,000. Okay, amount paid is 75,000. So they have paid extra 15,000. This is for what? Goodwill, we know that. Okay, we have solved it in the previous question. So this 15,000 is basically for goodwill. Now the question is asking us total value of goodwill of the firm will be. We have to calculate the total value of goodwill of the firm. Okay, total value of goodwill of the firm. So how will we solve this? Let's read the question once again. See what's the question saying. PQ and R are partners in a firm, sharing profits what? Equally. They are sharing profits equally. Okay, PQ and R. Now see, PQ and R are partners. PQ and R are partners. Their sharing ratio is 1:1:1. Okay, is there anything mentioned about new profit sharing ratio or gaining or sacrificing? Nothing. Okay, only the old ratio is given. So now what happened? How will we do is, what is the value of goodwill of the retiring partner? Who is retiring? R. Okay, R is retiring. So R is retiring. Okay, so what is his share? 1/3. So this is the value of goodwill of R. Okay, so R's goodwill is how much? Value of R goodwill is 15,000. So now if I have to find out the goodwill of the firm, how will I do? They are sharing equally. Okay, they are three partners. So I will say if R share is 1/3, what will be the total share of the firm? 3/1. Okay, so the value of goodwill will be 45,000. The value of goodwill of the firm will be 45,000. Okay, so the answer for your question number 72 is 45 50,000. Okay, so this is the answer. I hope this is clear. Now let's move to question number 73. What is the question saying? Sum due to the retiring partners in case of retirement is, okay, sum due to the retiring partners in case of retirement is credit balance of his capital account and current account, if any. Sum due to retiring partner in case of retirement is credit balance of his capital account and current account, if any. Okay, so what is the sum due? Sum due basically means payable. What is the payable to a retiring partner? Credit balance of his capital account, obviously, right? If there is any balance in his capital account, we will pay that, and if there is any balance in the current account also, we will pay that, right? So A is the right answer. Okay, now let's further read. Okay, there may be other options also. His share of accumulated profits. His share of accumulated profits. Okay, will he get his share of accumulated profit? Yes. Okay, he will get his share of accumulated profit. This is also right answer. Now let's read point number C. His share of goodwill to be written off. Okay, his share of goodwill to be written off. Now the question is saying sum due to the partner means payable to the partner. Okay, is this the right answer? His share of goodwill will be to be written off. Is this an amount due to the firm? No, this is not amount due to the firm. Basically, this is the item which will reduce the capital payable to the partner. Okay, interest on drawings, if involved up to the date of retirement, this item will also reduce the amount payable to a partner. So what will be the right answer? A and B only. Okay, so the right answer is A and B only for this question. Okay, A and B is the right answer. I hope this is clear. Question number 73. Okay, now let's see question number 74. Question number 74. A firm earns a profit in last 3 years as follows. Okay, the firm is earning profit of 75,000 in 2021. 18-19 it is earning 50,000, and 19-20 it is earning 1,20,000. Additional information is given. Closing stock of 2021. Okay, basically they are talking about this period. Okay, closing stock of 2021 was undervalued by 10,000. What was the closing stock? It was undervalued by 10,000. Basically, the question is trying to say is in 2021, okay, we valued the stock by 10,000 less. Okay, less by 10,000 rupees. Now, what will happen in this case? If your stock is undervalued, what will happen? Your profit will be lesser by 10,000, right? The amount of what's happening with this pen? I don't understand. Okay, it's correct. It's good now. Now see what will happen. In 2000, your closing stock, the value of your closing stock in 2021 was undervalued. Means so for example, the value of the stock is 1 lakh. Okay, the actual value is 1 lakh. But what we have done, we have take it as 90,000. Okay, so 10,000 is undervaluation. So 10,000 basically we undervalued the stock. Okay, now what will happen? Now let's see. Okay, let's try to understand. Let me give you a example with the trading account. Okay, so this is your trading account. So when you prepare your trading account, you have your opening stock here, you have your purchases here. Okay, let's say 10,000 rupees, purchases of 1,20,000 rupees, by sales of rupees 1,50,000, by closing stock of rupees 30,000. Okay, so what will be your gross profit? 1,50,000 plus 30, 1,80,000 minus 1,30,000 will be 50,000. Your gross profit will be 15,000. Okay, now say for example, your closing stock, the actual value was 40,000, but you have taken it as 30,000. So there is an undervaluation of 10,000. Now see what will happen if I bring this closing stock to the right value. Okay, the right value was 40,000. Okay, so now the moment I make my closing stock, I bring my closing stock to its actual value. See, this will be 1,90,000. Okay, minus 1,30,000 will be how much? The profit, my gross profit will increase by 10,000. See, my gross profit will increase by 10,000. Okay, so because of undervaluation of my closing stock, okay, what has happened, the profit for this period, the profit for 2021 was 75,000. Now what will happen if I add back my closing stock of 10,000? This profit will be increased by 10,000 also. Okay, so basically the question requirement is to now calculate average profit. Okay, now let's simply calculate average profit. What will be the average profit? Simple, 10,000 for this 2021, 10,000 plus 50,000 plus 1,20,000 divided by 3. So what will be the right answer? This is 85, sorry, this 2, when you add this 2 it will be 85,000. Okay, 85,000 plus 50,000 plus 1,20,000 divided by 3, it will be, the right answer will be 85,000. Okay, so the average profit is 85,000. I hope this is clear to you. Okay, so what is the answer for your question number 74? 84,000. See, it was undervalued. Okay, your stock was undervalued by 10,000. No? So if I add back this 10,000, my profit for 2021 will be 85,000. Okay, it will be 85,000 plus 50,000 plus 1,20,000 divided by 3. So the right answer is 85,000. Okay, I hope this is clear. We are done with question number 74. Okay, now let's move to some other questions. Okay, let's see some more questions on this topic. 70. Let's come to question number 75. Okay, we are done with question number 74. We are done with question number 72. No, yeah, 74. Now let's move to question number 75. Let's see what question number 75 is saying. At the time of retirement of a partner, okay, if retiring partner's whole amount is treated as loan, okay, then this should be the, okay, then the total amount is debited in, which account? At the time of retirement of partner, if retiring partner's whole amount is treated as loan, then the total amount is debited in, what is the right answer? The right answer is retiring partner's capital account, right? We used to debit it in the retiring partner's capital account. Okay, so question number 75 is done. Now, how many questions are there? Yeah, we are almost done with this unit number 3. Okay, now let's see question number 76. MSNG are partners in a firm sharing profits in the ratio of 2:2:1. G died on 5th November 2021. Under the partnership deed, okay, the executor of this partner are entitled to his share of profit to the date of death. Okay, calculate on the basis of last year profit for the year ended 31st March 2021 was rupees 3 lakh. G share of profit will be, okay, basically what the question is saying, MS and G are partners. Okay, they were sharing profits in the ratio of 2:2:1. G died on 5th November 2021. Okay, under the partnership deed, the executor of this partner are entitled to his share of profit to the date of death. Okay, so basically the question is saying, if this is the balance sheet date, okay, closing balance, we have closed the balance sheet on this date for the last year. Okay, now G died on 5th November. Okay, so for this period G had worked, no? So basically they are talking about the profit for this period. Okay, they are talking about the profit for this period. Now what is the requirement of the question? We have to calculate G's share of profit for that period. Okay, now we have to calculate it on the basis of last year's profit. Okay, last year's profit, and the profit for the last year was 3 lakh rupees. Simple. What will be the answer? Let's see, let's just solve it here only. 3 lakh into how much? What is the ratio? 2:2:1. So 1/5 into, now see, balance sheet date first for 2021. G died on how much? G died on 5th 11/21. Okay, now you have to count the days. Okay, April 30 days. Okay, April how much? 30 days. May how much? May 31 days. June 30 days, July 31 days, August 31 days, September 30 days, October 31 days, and 5 days in November. Okay, so what will be the total days? If you count, it will be 219. Okay, so he will get his share for 219 days. So 219 divided by 365. Okay, so what will be the answer for question number 76? 3 lakhs divided by 5 into 219 divided by 365. Okay, so the right answer is 36,000. Okay, so the answer for this question number 76 is 36,000. Okay, I hope this is clear to you. So now let's move to question number 76. Okay, question number 77, sorry, question number 77. Now what's question number 77 saying? On the death of a partner, his share in the loss of the firm till the date of his death is transferred to which account? Okay, on the death of a partner, his share of loss in the firm, okay, till the date of his death is transferred to which account? Loss. Where is loss transferred? It is transferred to the credit side of P&L suspense account. Okay, so what will be the journal entry for this? It will be partners capital account debit to P&L suspense account. Okay, so it is credited to P&L suspense account because partners is debit. It is a loss, right? If it was profit, the partners would have got this profit, so partners capital account would have been credited, but it is a loss, so partners balance will be reduced. Okay, amount payable to the partner will be reduced. So see, you'll get options in the exam. Okay, I have not written the option for this case, so it should be better if I have written the options. Okay, but the right answer will be P&L suspense account. Okay, P&L suspense account will be credited. So we are done with question number 77. Now let's see question number 78. A, B and C share profits in the ratio of 3:2:1. A retired from the firm, selling his share to B and C in the ratio of 2:1. Okay, now what's the requirement of the question? We have to calculate new profit sharing ratio between B and C. Okay, so now let's see how we will do this question number 78. Okay, A, B and C are partners. A, B and C sharing profits in the ratio of 3:2:1. 3:2:1. Okay, now who is retiring? A is retiring. Okay, A is retiring. So A is retiring, and A retired from the firm, selling his share to B and C in the ratio of 2:1. Okay, so B and C basically will get A's share in the ratio of 2:1. Okay, 2:1. Now the requirement of the question is to find new ratio. Okay, so see how we will solve. Okay, so B's gain out of A's share. How much? A's share is 3 by 6 into, they are gaining in this ratio 2:1. Okay, so 2 by 3. B will get 2 by 3. This basically 2:1 will be 4. This 2:1. Okay, so B and C will get 2 in the ratio 2:1. Okay, so what is this? What will be B's gain? 6 by 18, 1 by 3. Okay, this is B's gain. Now let's calculate C's gain. C's gain out of A's share. Okay, 3 by 6 into 1 by 3. Okay, so 3 by 18. 3 by 18. Okay, 3 by 18. Now this will be 1 by 6. This is C's gain. Now let's calculate B's new ratio. B's new share. What will be B's new share? Old ratio plus gaining ratio, right? So 2 by 6 plus what is the gain? 1 by 3. Okay, 1 by 3. So 6, 2 plus 3 to the 6, 2 1 the 2, to be 4 by 6. Okay, and what is C's new share? C's new share is old ratio plus gaining ratio. What is old ratio? 1 by 6. 1 by 6 plus what is gain? Gain is 1 by 6. Okay, plus 1 by 6 will be 2 by 6. Okay, so what will be the new sharing ratio? New sharing ratio between B and C is equal to 4 by 6 is to 2 by 6 is equal to 2 is to 1. So this is the answer. Okay, so you can note this down, 2 is to 1. You can pause the video and you can note this down. Okay, now we are done with 78. Now let's move to 79. Only 2 questions are left in this unit. Okay, so let's solve this. Question number 79. ABC are partners sharing profits and losses in the ratio of 3 is to 2 is to 1. Okay, C retires and his share, which includes revaluation profit, general reserve and capital balance, was decided rupees 70,000. Okay, but firm paid him how much? 75,000. Find the value of goodwill, okay, of the firm at the time of C's retirement. Simple, we have solved this type of questions, right? But in that question the sharing ratio was equal, but in this profit sharing ratio has been given. Okay, so let's see how we will solve this question. Okay, so question number 80. Yeah, question, what is the question number 79? Okay, so question number 79. Question number 79. Okay, now what is the amount payable? Amount payable to C is 70,000. Okay, amount payable to C is 70,000, and how much they have paid? They have paid 75,000. So this 5,000 is basically for goodwill. This 5,000 is basically for goodwill. Okay, now taking C's share of goodwill, we have to find out the goodwill of the firm. Okay, now there are 3 partners A, B and C. What is their sharing ratio? 3 is to 2 is to 1. Their sharing ratio is 3 is to 2 is to 1. Okay, now what is C's share? C's share is equal to 1 by 6. Okay, so what will be the goodwill of the firm? Goodwill of the firm will be how much? If C is getting 1 by 6, okay, so what will be the total goodwill? How will we calculate? 5,000 into 6 by 1. 5 6 are 30. Okay, 5 6 are 30. So I hope you have understood this question. Okay, so goodwill of the firm is 30,000. Now you may say, why did we don't do 1 minus 1 minus 1 by 6? Okay, if you do 1 minus 1 by 6, how much you will get? 6 minus 1, 5 by 6. Okay, 5 by 6 you will get this, but this share is of A and B only, but we are finding the goodwill of the firm. Okay, so there are 3 partners A, B and C, so we'll have to calculate goodwill for all the partners. Okay, so this is the right way how to solve this question. Okay, so you can note this down. Now let's move to question number 80, our last question for this unit. Okay, ABC are partners sharing profits and losses in the ratio of 2 is to 2 is to 1. Okay, the ratio is 2 is to 2 is to 1. B died. Okay, B died. At the time the goodwill of the firm was valued at 30,000. Okay, so what was the goodwill of the firm? Valued at 30,000. What amount will be contributed by A and C towards B? Okay, what amount will be contributed by A and C towards C? Okay, now who is dying? B died. Okay, and you know that whenever a partner retires or dies, okay, his share of goodwill will be given by the gaining partners. Okay, so here nothing is mentioned about any other ratio, so we will use the old ratio. Okay, we will use the old ratio for the distribution of goodwill. Okay, now see how will we solve this question. It's simple. What is the old ratio between A, B and C? A, B and C. What is the ratio? 2:1. B died. Okay, so B died. Now goodwill of the firm is how much? Goodwill of the firm is 30,000. Okay, so what will be B's share? B's share of goodwill will be 30,000 into 2 by 5. Okay, 30,000 into 2 divided by 5, it will be 12,000. Okay, this will be 12,000 will be share of B. Now the question is saying what amount will be contributed by A and C towards B. Okay, so how much will A and C contribute? So let's see. A will contribute 12,000 into 2 by 3. So in this ratio, see, 2:1, because nothing, no other ratio is mentioned, so we'll distribute in the old ratio only. Okay, so what will be this? What will be the answer? 8,000. Okay, A will contribute 8,000 and C will contribute 4,000. Okay, so this is the answer for question number 80. Okay, so now we are done with unit number 3. Okay, so in the next lecture, in the next video, we will start dissolution of partnership firm. Okay, I hope you have enjoyed the session. So thank you for watching the video, and again I would like to remind you, if you like the way I teach, okay, I'm planning to give tuitions, especially this is especially for ISO students. Okay, students staying in ISO, I'm planning to give tuitions to class 12 students, accountancy. Okay, and the tuition will be 3 days a week and 2 hours a day. Okay, this may be 2 to 2.5 hours, okay, depending on the concepts, and the fees will be 2,500. Now for those students who are not able to pay this fee, okay, if you are facing financial crunches, financial problems, you can ask me for concession. Okay, so discount will be available for students facing financial hardships. Okay, you can DM me. This is my number, 7005 721165. This is my number. If any student, okay, if your juniors they want to take tuition, you can please give them my number, and if you are liking the way I teach, okay, you please suggest to your juniors, to your friends, so that they will be able to get good conceptual knowledge of accountancy and be able to pass with flying colors. So that's all for today. In the next lecture we will discuss about dissolution. Okay, so I'm trying to cover almost all the units for you guys for the CUET entrance exam, and I hope it will be sufficient for you to get good marks in the entrance test. Okay, so that's all for today. Thank you, bye bye, take care, study hard students, and see you in the next lecture.